Biden legislative agenda trying to be pushed through early on.
Okay, that's right where I wanted to go, Jack Fitzpatrick. To me, it's very important. You've got social infrastructure and you got what we perceive as traditional infrastructure. The moderate Democrats, the people winning 55 to 45, 52 to 48, which of those two items do they want? Which of those two is going to keep them in Washington?
The traditional transportation infrastructure is the easier one. There hasn't been a massive amount of pushback from the moderate Democrats on some of the more social infrastructure proposals from Biden, but they've actually had a bit more of a process focus when you look at Senator Joe Manchin in particular, rather than the policy itself. And Republicans have said, we really want an infrastructure bill. So we'll have to hear a little more if there is a Democrat-only push for this legislation, what the key issues are for moderates. But so far, they've more or less sided with Republicans and said, why don't we try to work together on something that doesn't hit on all of the social infrastructure, the human infrastructure, and is more the traditional physical infrastructure. But they haven't necessarily said that the moderate Democrats are against that entirely.
Jack Fitzpatrick, thank you so much. Greatly appreciated this morning. Lisa, what's so interesting about this is this goes back to the Erie Canal across western New York and frankly, the Chesapeake and Ohio Canal of another time and place in the early 19th century. America's been arguing about who's going to pay for infrastructure since time began.
Well, and now we're talking about the definition of infrastructure, and I think that this is important, especially in light of the $250 billion bill passed yesterday to support U.S. technology in its fight against China for technological prowess. Does this count as infrastructure? Is this new spending? How do we sort of look at some of these piecemeal plans that actually do have more support, and how do they fit into some of the broad infrastructure banner? I mean, honestly, Tom, nobody wants to pay for anything, and yet there does seem to be more willingness nowadays than it has in the past.
How do they do this in Germany? My perception is Germany has perfect infrastructure. Am I right?
Well, no, that's...
How do they do it?
No, that is not true. Germany has absolutely horrendous infrastructure, crumbling highways, horrible broadband reach. But I will say this. You know, around the time of Brexit, when all of the banks were trying to get their employees to move to Frankfurt, to move to Paris, to move to Dublin, infrastructure was the key word there, and by that, they meant things like childcare and schools. That was the key infrastructure that was lacking in Frankfurt that they have in London for bankers.
Interesting. Let's do the markets right now. Lisa Bramowitz, red and green on the screen. What do you see?
I'm really just focusing on the 10-year yields and on real yields, just going lower. Honestly, it is fascinating to me that this is happening amid a fierce debate in the economics profession right now about whether inflation.
We're all going to die.
Yeah. Well, I mean, that's the question, right? I mean, you have the likes of Kevin Warsh, you have a whole host of other former Fed officials coming out and saying this is potentially a really dangerous policy by the Federal Reserve.
A really important paper out by Deutsche Bank. We'll be looking into that in the coming weeks. David Folkerts-Landau and Peter Hooper making it real clear they're studying inflation as well. Coming up, Ian Bremmer of Eurasia Group, the president travels to the United Kingdom.
surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg Surveillance. Good morning, everyone. Matthew Miller in for John Farrow, Lisa Abramowitz, and Tom Keene. An eventful surveillance today across our hours. The president traveling, leaving the White House, traveling over to the G7 meetings. We need to do the markets right now. Lisa, help me again here. Red and green on the screen. Lisa, I think the equity markets, the persistency here, including S&P futures yesterday up to record highs, really stunning to see that persistency.
And it really does stem from the lower yield environment. The idea here that this particular paradigm is going to continue. And I know you love that word, so I just want to throw that in for you. We're going to have a new drinking game with paradigm. But the question that I have is, at what point is there a dissonance between a lower growth outlook implied by the bond market and equities continuing to rally, given some of the Q2 projections for earnings? I mean, really, they're supposed to come in 60% higher. And at what point are we getting to peak earnings expectations?
Matt Miller, David Focus-Landau, and the team at Deutsche Bank saying inflation is tangible. Is that the zeitgeist in Europe?
Yeah, absolutely. I mean, we see inflation ticking up here at a slower rate than you have it there. But of course, Germans are much more concerned about inflation probably than Americans are. And we also have a different wage situation here. You know, when you lose your job in the U.S., it's much more difficult than when you lose your job here. And the wage stagnation, I think, is one of the most interesting parts. We don't see it coming up with prices over the longer term, over the past decade or two.
Very good. Let us turn now to the president's trip. And we are thrilled to speak today to Ian Bremmer of Eurasia Group. It is G0 media, but far more is the effect of his many books upon our thinking of international relations, and that includes the phrase, a G0 world. Dr. Bremmer, President Biden will travel to not the G8 ex-Russia, the G7 meetings. How G0 is this G7 meeting?
Well, it's less G0 than last year, since the G7 didn't even meet in the year of the pandemic. It clearly is a little more aligned. We've got a few pieces of news that matter. The Europeans and the Americans coordinating pretty effectively in the response to the downing of the Ryanair plane to Minsk, the diversion a couple of weeks ago. So everyone pretty irritated at Belarus right now. Secondly, you've got the Biden administration announcing coordination of this global minimum tax. It will take years, if it ever gets done, to get the U.S. Senate and individual European parliaments to ratify it. But still, it's a meaningful move towards coordination among the G7 that sets up the OECD in that direction. So it's not like nothing is getting done. But on really big issues out there, like on coronavirus response, like on climate change, we are very, very far from meaningful global coordination. And even on China, where the U.S., of course, sees Beijing as its principal adversary through a national security lens, the Europeans largely do not. And this is perhaps the most principal issue that really divides the G7. In a Cold War era, the G7 is all rowing in the same direction because everyone sees the Soviets as their principal adversary. Today, that is no longer the case at all, and it makes life a lot more difficult.
But you see, Ian, you see the polarity of Europe. Mr. Orban of Hungary coming out and saying the global minimum corporate tax plan is, quote, absurd. Okay, that's one view from Eastern Europe. What captured my attention was the Merkel victory in domestic elections in Germany over the weekend. And to borrow from Mr. Trump and the Queen, mean, does the president let Chancellor Merkel walk in front of him? I mean, the body language that we're going to see at this summit has to tilt to the Chancellor of Germany in her esteemed career in her recent political victory.
Well, since it's her last G7, sure, I'd let her do that. And since the relationship between Biden and Merkel has always been friendly, I've seen Biden now attend in-person Munich security conferences for 15 years. There's always been a good relationship with Merkel and the top of the German government. The Biden administration is staffed. Its cabinet are largely Atlanticists who like these people. The European allies, Orban is the singular major exception, are much happier with Biden than they were with Trump. But that doesn't mean they trust the Americans. That doesn't mean they're as aligned with the Americans. And they also are very aware of just how unstable and politically divided Biden's own leadership for the future is. And so the willingness of the Europeans to suddenly count on a United States that they are somewhat less aligned with, and they also don't necessarily trust the long-term nature of its commitment, that the U.S.-EU relationship is nowhere close to where Biden would like it to be. And this idea that America's back, Tom, I mean, when Biden said America's back, in terms of power, America never went anywhere. Not our dollar, not our tech companies, not our energy production. In terms of the influence we have with allies around the world, America has been deteriorating for a long time, and it's not changing very much right now.
Can it ever get back, Ian? You know, I split my adult life between Germany and the U.S. And when I first came here in the 90s, in the early aughts, I was welcomed with open arms. They were so excited to have an American in their midst who actually spoke the language. There was a real brotherhood between the two countries after the healing from World War II. And then with the first or the second move into Iraq under Bush II, the relationship disintegrated a little and was absolutely destroyed by President Trump. Can we ever get back together?
It wasn't destroyed by Trump. It was deteriorating under Bush, under Obama, and under Trump. And that deterioration accelerated over time. But I think it has less to do with the individual presidents. It has more to do with the fact that the United States no longer leads by example in the eyes of Europeans. Our democracy is by far the most divided and dysfunctional. January 6th was an absolute shock to the Europeans, more so than it was in the United States. We kind of got through it. We're soft, you know? I mean, we don't have these structural problems. Anyone that said it was a coup, no, it's not a coup. You know, we came back and we get to business as usual, such as it is. The Europeans are pretty startled by all of this. And let's also keep in mind, you remember when the Snowden revelations showed that the Angela Merkel's cell phone was being hacked by the Americans? It's just a very different environment where the U.S. is seen as much more unilateralist. Biden says we're pulling out of Afghanistan. The Europeans have as many troops there as the U.S. He didn't coordinate that with the Europeans. We announced that we're going to not pay attention to patents anymore for coronavirus. The Germans and the EU strongly opposed that. Wasn't coordinated in advance by the United States. So even though they like this guy, and even though they trust us more than the Chinese, we're actually farther apart than we have been.
Well,
and that,
but Ian, that's exactly where I wanted to go. And I don't mean to cut you off, but there's this question about how, yes, the U.S. perhaps isn't as far apart from Germany as they are with China. However, what kind of consensus, what kind of alliance can they forge if there isn't that trust? And frankly, if Germany looks at the U.S. and says, you're not leading by example.
We can forge a lot of coordinated policies when it's intentional and when it's specific. So if we sit down and say that we want to work together on dealing with digital services tax, dealing with an alternative minimum tax, we don't have to hit each other with, you know, an escalating tariff environment. We can create predictability for the markets. On Belarus, an issue that is, not front of line for the average American in Washington, but nonetheless, Biden made it clear that he wanted to coordinate with the Europeans, and we did that. We did that effectively. But that's very different from saying that on the issues that are the top priority for the United States, that the Europeans will see them in the same way. And one thing we haven't mentioned so far, which matters a lot more than what we've seen in the U.S., is Brexit. The UK is by far the most aligned and closest former European country with the United States. They're no longer in the EU. The UK relationship with the EU is very strained. This makes it a lot harder for the Americans to actually get the Europeans on the same page, because the UK used to help us with that inside the EU. They don't anymore.
So, Ian, can you give us a sense of what kind of guideposts you're looking for to determine whether this global tour that President Biden is embarking on today is successful?
I want to see how much Emmanuel Macron talks about strategic autonomy in front of the Americans. The French have a very different view of the future of Europe in terms of national security, in terms of migrants, in terms of the Middle East, North Africa, you name it. I want to see to what the Mediterranean, I want to see to what extent he is trying to make a name for himself. Let's keep in mind, Merkel did very well in these elections in East Germany. Macron is going to be there after Merkel is gone, and he sees himself as the future leader of Europe. So I want to watch that. I want to see the mood music between the Germans and the Americans at the high level, see how much it looks coordinated in advance. And I want to see if there's any substance to the comments that come out.
Nobody cares. When's your next book out?
Early next year.
Early next year. Give us a theme. Give us a tease here.
It's called The Crisis We Need. And given that coronavirus, I mean, the lessons we've learned from coronavirus globally do not exist. So to what extent can we take from that any solace that with climate, with the technology revolution, with cyber, are we going to be able to use those to change our governance? Winston Churchill, looking at the world after coronavirus, would be very disappointed we did not take advantage of this crisis.
What about the drought? Very quickly here, Dr. Bremer. The drought in the United States, I think, is underplayed right now. Do you agree?
I think that Americans are paying a lot more attention to climate. Young people, whether they're from the left or the right, than they were 5 years ago. The fact that it's hitting a lot of Americans at home really matters.
Dr. Bremer, thank you so much. Really look forward to getting out 6 months now where we'll begin planning his top risks of 2022. Hard to believe we're getting to 2022. Lisa, what I think I learned the most important thing there, I mean, let's be honest, with Bloomberg surveillance, Matthew Miller, Atlanticist.
Is that what we've learned?
No, he's an
Did we learn that? He's an Atlanticist. Matt, do you want to explain
what is
yourself?
an Atlanticist?
I couldn't define it, but I'll tell you that I've met many Atlanticists who spend their time living between Europe and the U.S.
That means you've given up.
I'm not exactly the absolute definition.
I'm thinking it means you gave up Budweiser. I mean, I'm just thinking that's maybe the definition.
I gave up Budweiser in New York, right? Because of the IPA craze when I lived in New York, I can now drink nothing else.
You were the guy at the bar saying, if I don't have an Anchor Steam, I'm going to have a tantrum, right?
Anchor Steam, Sierra Nevada, and now Brewdog.
Well, in all seriousness, though, Tom, what I learned from that and what I think is really important to note is that while President Biden is talking about bipartisanship and also getting back together with allies, there's still a lot of distrust. It's going to take a lot to get that relationship back up together. And there's a question of what kind of policies they can come up with to counter the economic prowess of China at this moment, given some of that distrust and given the reliance that the German economy has on China for exporting and for other trade.
And how about this, Lisa, a new theme, the new gridlock that we're really beginning to witness here, witness Orban in Hungary on this global tax thing leads to markets. The markets like gridlock, nothing gets done. Well, markets know what the plan is, nothing.
Well, people don't want higher taxes in markets, right? I mean, because higher taxes typically do slow growth to some degree. That said, this uncertainty isn't great either. So there is a question of whether we actually get gridlock or whether it influences domestic policies around the world.
I look at the markets, red and green on the screen. I really want to note NASDAQ 100 leading the way as we see the last day. Some saying that's a duration play, a little bit complexity there, but we'll go with it. The 10-year yield, Abramowitz demands 4 digits, 1.5060 on the 10-year. The real yield rounded out negative 0.88. On the 10-year real yield, and pros watching the 5-year real yield as well. Dollar weaker, DXY under 90 gets my attention. Euro on a cent. Matt Miller buying lunch. Stay with us. This is Bloomberg on radio, on television.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacqua, and we'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of 2 very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Those who have been not vaccinated yet, please get vaccinated. This is the National Month of Action. We want to get to and above the goal of 70% of the adult population receiving at least 1 dose by the 4th of July.
Dr. Fauci there, and of course he has been much in the news, a raging debate on the political front of this pandemic as he looks at the medical front as well. We take great pride, Lisa Abramowitz and I, in what we've done on surveillance in covering this pandemic. Matthew Miller in for John Farrow today as well. And on the markets, red and green on the screen, but a very nice support with the VIX 17.17. We're watching Brent crude touching near 73 earlier, and the 10-year yield is a beast of its own, 1.51%. Right now, we welcome someone really quite different. Bhakti Ansari is out of the microbiology complex at Edinburgh. That's like the University of Washington in the United States of America. It's a high-class set of degrees, and she's followed that on with great distinction to Johns Hopkins, where she's associate professor of emergency medicine, but truly with a global front. Dr. Ansari, let me start with the international view. How is India doing?
India, so we're not hearing about the acute oxygen needs that we were hearing 3 weeks ago, about the panic that we were seeing. But today they had over 92,000 new cases, and that is in a setting where testing is still difficult to come by. So we don't really know what the true number is. But the cases seem to be going up. People seem to be dying daily. We're strapped for resources. However, the need or the pivot has gone from oxygen needs to more holistic medical care needs.
Given that reality that we're seeing in India and that we're seeing in some countries, paired with the very different reality in the United States and the United Kingdom, when do you foresee a time where we become a united world one more time, where you can fly anywhere and not have to worry about COVID and the pandemic existing?
So, kudos to the world leaders and initiatives such as COVAX. Vaccines are on the way in India. We've already seen that in the United States, where the uptake of vaccines has led to some sense of normalcy in our lives. Children are back in school, for example. In India, I think that will follow, although I think there'll be a disastrous residue of the COVID-19 pandemic on the country, as we predict over 1.5 million deaths by the end of the summer. I think normalcy will come likely in the new year. I think 2022 will be a much better year, all things considered.
What are we learning about long-term COVID, long COVID as it's called? What have we found out in the past few months as this pandemic drags on?
Long COVID is extremely frequent. It's more frequent than when most of us would think. It is subtle, and it has a whole consortium of side effects. So people have difficulties breathing, people have difficulties with the heart, having high heart rates, there's chronic fatigue and tiredness, and there's also psychosocial or mental health concerns with ongoing mood disorders and ongoing anxiety. It requires a multidisciplinary approach, but what I want to emphasize is that it's subtle. So people think they're doing fine, that they're just recovering from the acute illness, but in fact, it could be long COVID.
Meanwhile, in the United States, one of the big questions is when younger children will be able to be vaccinated. And if John Farrow were here, he would make fun of me for asking a completely...
So I will, thank you.
So
please.
Tom, go ahead. Self-serving question about when my younger son will be able to get vaccinated.
That's
but what
good,
do we...
please. Should it be at 2 p.m. or at 4 p.m.?
Exactly.
Lisa?
When should I schedule the actual vaccination? But Dr. Ansari, when are we going to start seeing kids under the age of 12 starting to get vaccinated?
By the fall. So clinical trials between 5 to 12-year-olds are already on the way. Pfizer has not reported any significant increase in adverse events. The dose has been reduced for children between 5 to 12. And this seems to be working well. I think by fall, you're going to have FDA approval for 5 to 12. And I have a 3 and an 8-month-old. So I'm really praying that by the new year, my little ones will be vaccinated too.
Is there a danger to the vaccinated from the unvaccinated?
Completely. So we know that while people are getting vaccinated, that the efficacy of those vaccines isn't uniform. So people on transplant patients, cancer patients, patients with other immunocompromising diseases may not mount an appropriate antibody response. So they can still get sick despite being vaccinated from unvaccinated individuals. And for them, the world is still a very scary place, because now, as you see individuals en masse, you don't know if they're vaccinated or unvaccinated.
Dr. Ansari, thank you so much. Greatly, greatly appreciate it. Look forward to seeing you again with Johns Hopkins University, Dr. Bhakti Ansari today on this pandemic. Guys, let's turn to the market here. We're going to have a lot on President Biden coming up in an hour and a half. He'll leave on Marine One, I believe, and go to Andrews. and then off to the land of Poldark. We'll see how that goes. Guy Johnson giving us coverage here over the next couple days as well. Lisa, on oil, I'm sorry, fancy suits and ties and bow ties don't care. A huge part of the nation really cares.
Well, you mean in the United States, yes. Yeah. In terms of the amount that people are paying at the pump, the fact that the prices have gotten pretty high, but then also that the U.S. economy relies significantly or much more significantly on oil. One interesting thing, and this came by a viewer who said that inventories actually have fallen in the United States as production has fallen. So not only has the marginal producer in the United States not ramped up their oil production, but they're actually decreasing it. There is this new emphasis on financial discipline and not over drilling, which really raises a question. How long lasting can that be? And if that means that perhaps there isn't this peripheral supply, does that actually send prices that much higher?
Matt, $5.57 a gallon in Germany?
Well, that's if you're buying the cheap stuff, right? I mean, I always try and buy the V-Power at Shell. I think it's much better for my engine.
Do you drive differently because of that price?
No, he doesn't. He has a Hummer.
No,
are you kidding?
No,
who are you talking to, Tom?
I don't have a Hummer, but I do have, you know, a fairly large twin-turbo V8 that drinks gas. I don't drive any differently because of the price, but I drive less than I would in America because here you can take the train anywhere. You don't really need a car. When I lived back in Ohio, you have to have a car to get around to live.
Yeah. All this was, folks, this was what you're seeing right now is agreed on the terms to get Mr. Miller to come on during this hour. As we close out the hour, you need to understand that if we don't do obligatory car talk with Matt, he won't come on. I mean, you know, his agent,
there's a new boss at Ferrari.
Well, his agent had a tantrum and said, look, you got to do some car talk with Matt or he's just not going to. I mean, Lisa, did we do okay?
I don't know. Marginal. We'll leave it to the viewers. I think that this is a key question,
Don't you think it's fascinating that there's a new boss at Ferrari and he comes from ST Microelectronics?
I'm just sitting here on the edge of my seat.
Maybe we'll see you tomorrow. Matt Miller, thank you so much. For all I know is Johnny Damon drove a Ferrari. That's all I know. Folks, he's a baseball player of lore. He was with the Red Sox and then with another team at one point as well. Lisa, the president, it's always exciting, Lisa, a president with his first trip off the lawn of the White House.
Yeah.
It's a big deal.
It is a big deal, especially as he tries to rechart the U.S. as a leading character in the world stage after a period of that not being the case.
Guy Johnson with coverage in Cornwall. Guy Johnson, he's watched all of Poldark. This is Bloomberg. Good morning.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
I think the sort of reopening has a long way to go.
We actually think the markets tread water for a bit as we continue to be concerned about inflation and taper talk.
It's very likely that we won't have certainty around the underlying inflation process until we're well into next year.
The inflationary pressures that we're seeing will abate, but I think we are in a pretty unique period of monetary policy.
We have a real recovery in process. I don't think the roaring 20s are the right analogy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A simulcast on radio and television. We welcome all of you with markets nicely on the move. Romaine Bosca doing it again for John Farrow in today. We'll get to the meme of the moment with Bostic, our true expert on that. Lisa, we've got to look today and to Washington, to the pageantry of the president and Dr. Biden moving across the Atlantic to the United Kingdom and the G7 meetings.
And the importance here is the idea that President Biden has been trying to shore up the alliances that traditionally have been the mainstay of the U.S. international policy at a time that role has been highly diminished as far as the global leader after President Trump. We're looking for any kind of inclination as to what concrete steps the allies will take to counter China, Tom.
And we'll see that today. And the backdrop here is the market. Lisa, we've got to go. Let's go away from equity. We'll do the meme thing with Romaine here in a moment. Lisa, you and I stand in awe of a 1.5026. We may get a 149 handle on the 10-year yield. Lisa, unimaginable.
It's unimaginable because we're seeing inflation expectations and inflation surprises come in at the hottest pace in 13 years. We got, even overnight, China production input prices rising to the highest since 2008, the fastest pace. I mean, all of these inflationary pressures are coming and getting shrugged off by investors who are looking at central banks around the world who are not going to move rates, but it really raises attention. Who's going to blink first? Who's getting it wrong? Or is this the way it's going to be for a long period of time, Tom?
And, of course, we have to look at the Dow Jones Industrial Average, the S&P 500 really out near new highs. All of that pushed higher by the next Dow component.
Yeah.
Clover
Dow.
Health Investments.
The next Dow component.
Romaine,
yeah, it might
I
be
asked you this yesterday. Yeah. I failed.
Yeah.
How do these companies get selected to be the next moonshot?
I wouldn't overthink it. I mean, there's a lot of going on here behind closed doors, so to speak, or at least in social media with the door open. They decide, basically, look, something maybe that seems fun, something maybe seems shorted heavily, something maybe just seems like it might actually have a good fundamental case to be made. No one really knows. I mean, yesterday we saw Clover Health was up 109% at one point on the day. It closed up by about 85% up here in the pre-market. You had Wendy's, which was also inexplicably higher for reasons that no one seemed to know. And today you have a whole host of other companies up there as well. Context Logic up about 40% here in the pre-market here. Again, I mean, if you're looking for a fundamental reason or even just a practical reason, you're probably not going to find it, Tom.
Are you okay? Great. That's not the answer I wanted. Romaine, you're our expert on this. Do you, as the expert, say where's the regulation?
It was the answer I wanted.
Or do you just say let's go?
Well, hey, we posed this question yesterday on Bloomberg Markets at Close to a couple different people, and here's the issue here. The issue is, how do you regulate something that is so disparate, right? I mean, you go back into a previous time before social media, it was maybe a little bit easier to target market manipulation, but here you just have basically crowdsourced decision making, and who's the ringleader here? I mean, who do you point to? I mean, a lot of these people you can't even identify. I'm sure there's probably some sort of magic behind the throne here, but so to speak, but no one's been able to identify it.
And Romaine, what's great about this is there was fundamental research done at the Abramowitz house on Wendy's there, popping up higher as the offspring went for the pretzel bacon pub double cheeseburger.
I think it's a summer of salad, Tom. You're missing the fundamental picture here. There's strawberries on that salad. That's got to be worth like $15 a share.
That isn't the Abramowitz household, I will tell you that right now.
How about Dave's Double? Dave's Double would have done it for the kids, Lisa, as well. Let's go to the markets right now. We've got a wonderful guest ahead. Let's do this quickly. Lisa, help me out here. DXY under 90 is a big deal. It does indicate, once again, weaker dollar.
Yeah, one thing that I really I find notable is green across the board. And the reason why this is interesting is because increasingly you're seeing yields higher and you're seeing, yields lower, price higher for bonds, while also you're seeing stocks climb. This paradigm, to use your word again, Tom, is continuing. This idea that everything can continue to rally in tandem, even as you see commodities reach the highest levels since 2018. And that's certainly what you're seeing from crude as well. 70 handle on the NYMEX. Right now, what I'm looking at in the day ahead, 10 a.m., you've got U.S. April wholesale inventories. Interesting to see the drawdowns. Nobody cares, you say, but each data point feeds into the supply-demand dynamic. We know demand has been super hot. How much are we starting to resolve some of the supply chain disruptions that have really marked and become an issue for so many consumers, retailers, and manufacturers? So 10:30 a.m. EIA crude inventories. EIEIO. Would you like to sing for us, Tom?
EIEIO.
All right, moving on. The question here to me is, are we going to see the similar kind of surprise that we saw last week? We actually saw a decline in production by U.S. suppliers. This has been incredible discipline at a time when oil prices are the highest since 2018. At what point will they start to be lured back into producing as a result of higher prices? And then at 1 p.m., the U.S. is planning to sell $38 billion of 10-year notes. Usually these are no drama. Tom, I'm doing this just for you. I think this is fascinating because increasingly
let's stop the show now. Stuart Kaiser wants to know why this is fascinating.
Okay, because these auctions are going really, really well at a time when inflation expectations are some of the highest that we've seen in years. When you're seeing the actual input costs go up dramatically, and anybody who goes to the grocery store, or anybody who goes to the gas station, anyone who plays the rent, it's just. It looks like there's inflation. It smells like there's inflation. The data shows that there's inflation. And if you look at the bond market, they're shrugging it off and saying, forget about it.
See, what you don't see on radio is Lisa gets wound up on bonds. She looks like Elsa in Frozen singing at the top of the
All right, let's move on.
Okay, let's move on. Stuart Kaiser joined us. Let's get right to it with UBS Head of Equity Derivative Strategy. Stuart, in your world of equities, is your world linked to the 10-year yield and the shock we see with low yields?
Hey, good morning, Tom. It definitely is. And I think really what you've seen recently is probably pretty positive for equities in the sense that inflation break-evens and inflation expectations had started to get to the level at which we thought it was going to become disruptive for equity markets. But now with with the 10-year break-even back below 240, with 10-year yields pulling back a little bit, I think that sort of has relieved the pressure a bit. We had a very fast and high volatility rise in rates and inflation expectations. The fact that those have come off a bit, I think, has kind of reduced a little pressure on markets. But there's definitely a link between the two, no doubt.
So where is the source of potential volatility here?
For markets, I mean, I think Fed policy is going to be probably the number one source of potential volatility over the next couple of weeks. Obviously, we get a big inflation print on Thursday. UBS is well above consensus for both core and headline. So I think that'll test the recent moves in markets. You got 10-year break-evens up to 260-ish the last time we had a strong inflation print. So I think it'll be interesting to see how that plays out. And then secondly, the following week, how does that impact Fed thinking? Do the dots move? Does the Fed start to speak a little more positively about the growth outlook, which the market might read as hawkish? So I think over the course of the next month, those are going to be the two big ones, and then 2Q earnings upon us at that point.
But Stuart, why am I not to believe that what the market's pricing in right now is effectively what the market foresees here? If we do get a higher than projected read on that inflation, what would change the dynamics here that would take us anywhere away from 1.5, where we are right now on the 10-year yield?
Well, it's a great question. I think what most people are saying on the market side is, number one, a lot of the inflation is coming from things like used car prices, which they expect to kind of be quote unquote transitory. It hurts me to say that term, but that's the one that's out there.
Tom's drinking too.
So I think, look, I think, what would get it to move would be, do you see things like wage inflation, like rents, like goods prices inflation that might be a little more sustainable? So I think it's going to be below the surface in the inflation print. What are the drivers? And does that start to dislodge things? If you were to say, what could be most disruptive for markets, I think it's going to be longer term inflation expectations. The Fed looks at survey-based inflation. So if things like University of Michigan long-term inflation start to move, if the inflation term structure, stops being inverted from, 5-year to 30-year, that could be an issue as well. So look, it's a high inflation print, and then there's the components of that print that look less transitory than maybe the Fed and the markets are currently expecting.
Stuart, are we overplaying the inflation story, which we're not going to have an answer to until the end of the year, and perhaps underplaying some of these other factors, like, for example, earnings disappointments, especially given how high expectations are?
It's a great question. I mean, it's hard for a portfolio manager or a risk manager to ignore the cadence of the inflation data, right? So it could be that 6 months from now we look back and we think that was a tempest in a teapot, but an investor can't ignore that stuff as it's happening. So I think people are responding rationally to the data that they're seeing. In terms of earnings, expectations, I think, are high at the single stock level. But if you look collectively, S&P 500 EPS for next quarter, I think still shows a sequential decline versus last quarter.
It does, yeah.
So we do think there's, the potential as we get into actually post FOMC, I think as people start to look at earnings and sharpen their pencils, I think earnings could, turn out to be a positive catalyst over the course of the rest of the month.
We've heard that now. This is the second time. That's an important insight. Sharpen the pencils as we go to earnings. And, of course, we'll do that here on Surveillance. Stuart Kaiser, we look forward to you sharpening your pencil in a couple of weeks with us as well. UBS head of equity derivatives research. Romain, that's not a small item. We've heard that now twice. Earnings will be interesting.
Absolutely. And it's one of the reasons why I think you're seeing the market tread a little bit of water here. It's how a lot of what's happening in the macro environment feeds into those earnings. A lot of people thought we were going to see disruption out of that Q1 numbers. We didn't necessarily get it. They're still sort of on edge to see what happens with the Q2 numbers.
I mean, I'm going to do the math here. We can do it fairly quickly here, but Lisa, the pendulum of drawdown is tangible. I mean, it's just amazing to me how the equity markets are, it's on the edge of correction.
Well, let's not get carried away. Mike Wilson of Morgan Stanley yesterday on the Open was talking about how he does expect potentially a correction in the near term on the S&P, and he talked about the earnings disappointments, the potential for that given how high expectations are. But he also talked about taxes and how higher taxes would make a material bite out of earnings and how that could have an effect. Again, it goes to policy uncertainty. It goes to this question of visibility into the markets.
Didn't we basically have a mini correction at the start of May? Was that was that not the mini correction?
The close has mini corrections.
Yeah, that's right.
We just have pendula.
A lot happens, Tom.
We have pendula.
Corrections.
You have corrections. We've got pendula.
Mini correction sounds like Taylor Riggs. I mean, come on. A mini correction?
All right. Well, Dow futures right now on the day.
Wait,
Tom.
seriously? You're going to quote Dow? Wow. John, if you're listening.
You can stay. Guy, S&P drawdown, seriously, a negative 0.17%. I think scream sell to Paul Cash.
With the First Word News, I'm Rishka Gupta. They call themselves the Problem Solvers Caucus, and the group of House Democrats and Republicans has come up with a plan to break the logjam over infrastructure spending. Last night, they agreed on a total spending package of $1.2 trillion. President Biden has called for a $1.7 trillion plan, but yesterday he ended talks with Republican Senator Shelley Moore Capito after they failed to reach an agreement. The Senate has overwhelmingly passed a bill to help the U.S. compete with China. It calls for investing almost $250 billion to bolster manufacturing and technology. It was a rare spot of bipartisanship in an otherwise polarized Senate. Still, the bill's fate in the House is uncertain. And the U.S. has loosened the travel warnings for dozens of countries, including Canada, France, and Germany. It's a move that could ease airline restrictions for people wanting to go overseas. The State Department changed its warnings for almost 60 countries and territories from do not travel to reconsider travel. That's after the CDC changed the methodology for its own health notices. And in the UK, Chancellor of the Exchequer Rishi Sunak wants London's financial district to be exempt from a global tax deal. Next month, Sunak is expected to make the case that financial services should not be included in that plan to make multinationals pay a minimum corporate tax of 15%. That includes global banks with head offices in London. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or Ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
World leaders meet. On the agenda, global tax, security, climate change. Tune in for extensive coverage from the G7 summit in Cornwall, England, and the NATO summit in Brussels. Live on Bloomberg Television and Radio.
The negotiations ongoing with the White House on infrastructure have hit a significant roadblock. Republicans are committed to working on infrastructure the way that most Americans think of infrastructure: roads and bridges, and waterways, ports, airports, and broadband. The administration doesn't seem to want to go that way. They're ordering and including lots of things that are not what the traditional infrastructure ideas would include.
The gentleman from Wyoming, Senator Barrasso, talking the Republican view. As a note, our Michael McKee beginning his preparation for the trek to Wyoming to the Jackson Hole meetings of the Kansas City Fed. Mike and I had a quick talk yesterday about that. Really looking forward to a spirited Jackson Hole this year. And certainly on infrastructure, the spirit is there as well. Where there is agreement is on China. And as the president leaves for a G7 meeting, China is in focus. Wendy Benjaminson will join us now, Bloomberg's politics editor. Wendy, it's such an interesting thing, a bipartisan view on China, and then the president goes to a Europe that really is not in tight agreement. Explain that dynamic for the president as he travels to the United Kingdom.
Well, that's right. The president leaves today for the G7 summit in Cornwall, and then he will go on for lots and lots of meetings that include everyone from Queen Elizabeth to Vladimir Putin. So it's a big trip for him. It's his first big foreign trip as president. And as the EU Council president said yesterday or the other day, America's back. They're sort of welcoming back the United States after.
But is China back? I mean, what I find fascinating here, we heard this from Dr. Bremer earlier, there's some real nuances here in the Europe. There's some nuances in the Atlantic-China debate.
Yes, that's right. They, President Biden and the Senate have passed this Endless Frontiers bill, which sets up an infrastructure, if you will, to begin to compete with China on semiconductors and other things in supply chain and scientific innovations. And Europe isn't quite ready to compete with China as much as be a customer. So it's it's an interesting dynamic as he heads in there. It's good timing.
Wendy, let's dig into that $250 billion plan that was passed yesterday in the Senate, a bipartisan bill. How much is this rearranging the deck chairs in terms of shuffling money from one bucket to another and then putting it under a headline that looks politically attractive versus a meaningful initiative that could actually shore up U.S. competitiveness?
Right. Well, Lisa, you really hit the nail on the head there. I mean, obviously, this is a big political success for both Republicans and Democrats if it passes the House, which has a whole different idea for approaching this. But it does shuffle the money around a little bit. It emphasizes the National Science Foundation as sort of the one agency that will sort of corral all of this innovation and technology and push the money out to places where it'll go. It's not clear to me exactly how much this is new money or it's just sort of saying, let's go to the moon. Come on, let's compete with China. But it shows Biden as being tough on China. And it gives the Republicans a tough on China thing, messaging for the 22 election. I know that the Republicans are trying to make Biden seem soft on China, and this will inoculate the Democrats a little on this.
Perhaps, Wendy, although you do have to wonder what it means to be competitive in a global stage at a time when tech is changing dramatically, a lot of the ways that we do things. Do we have a sense of the ways in which the United States wants to compete, sees the most competitive frontiers? It's not necessarily going to the moon. What is it?
No, of course it's not going to the moon. It's competing with China in a more robust way, I think mostly on semiconductors, on solar manufacturing, where China is really kind of cleaning our clock right now, solar panel manufacturing, and other innovations where the U.S. could do more if there was sort of a concerted effort. But getting progressives to agree with Republicans on where that money should go and how it should work, whether it's clean energy or bolstering fossil fuels. That's a tough nut to crack.
Yeah, absolutely. I mean, the China bill was kind of an easy dunk here. You've got Senator Schumer, the majority leader in the Senate, already talking about a reconciliation process to get some of these spending bills through. That still requires, of course, all of the Democrats to be on board in the Senate. Any sense here that they are going to be able to move the Manchins and a couple of those other folks into the fold enough to get those spending bills through as we get deeper into the summer, Wendy?
I predict maybe that Manchin and Sinema, the two moderate centrist Democratic senators who sometimes vote with Republicans, I think they could get them on board for some of this budget reconciliation bills, which would be some of the spending that you heard Senator John Barrasso say he didn't consider infrastructure. The White House is trying to get people to think of infrastructure as broader than roads and bridges, and the Republicans are insisting absolutely not. Infrastructure means roads, bridges, airports, nothing more. And that is where the impasse is. I think they're still trying to come to a deal on that. Yeah. But the budget reconciliation process, which requires only 51 Democratic votes, which they can get, I think might be a way to get some of these other things through.
Look a little bit further ahead here into next year here. With the clock in a lot of people's minds ticking for Biden, this idea here that once you get past 2021, it's going to be a little bit harder to corral not only the Republicans, but of course his own party as they head into midterms here. How important is it for him to get his legislative agenda out there and at least considered before the end of the year?
Absolutely imperative. Absolutely imperative, because as soon as the calendar turns to January, we'll be in primary season for all the congressional seats, all the House seats, a third of the Senate seats, and that's when hand-to-hand combat begins, and no one will want to be bipartisan in 2022.
Wendy, watch the hand-to-hand combat. It can be dangerous. Wendy Benjamin's, and
especially on surveillance,
politics editor as well. At least I'm stumbling with my words because I'm looking at shock. In 4 basis points, a 1.4958 10-year. Good morning to Stephen Major at HSBC. He and the lonely crew who predicted this.
Yeah, and they expect the yield to continue coming in. This is the lowest since March. The question here is, what's driving this? And I was speaking with Priya Misra yesterday of TD Securities. She was saying that this actually, this actually feels like a short squeeze, and she wouldn't try to get in the way of this because, especially if the CPI data that comes out tomorrow comes in disappointing, you could see this go a little bit further. But really, it defies the sense that a lot of people have that inflation is picking up over the longer term. So how does this cohere with that?
Yeah, and I should point out, too, I spoke with Ben Emmons yesterday. He's going to be on another Bloomberg property a little bit later in the day, Tom. Bloomberg markets to close. And he also reiterated this idea about the short squeeze. There are a lot of properties other than surveillance, Tom.
Al, can I, I don't have another property. I mean, can we?
Would you like more work?
Al, please.
I'm sure our boss would
we're going to record
to
this.
give you another show.
Seriously. Well, you can talk about it at 9. On radio. Bloomberg Surveillance continues on radio at 9 a.m. with Tom Keene.
And Paul Sweeney. As it does as well. Look for that, folks, worldwide. We're on radio and TV right now. We welcome all of you. Coming up, we will see President Biden travel, I believe, on Marine One to Andrews Air Force Base. I'm sorry. I'm never calling it Joint Andrews. It's always going to be Andrews Air Force Base. There, I said it. On his way to England. Stay with us. Guy Johnson with his coverage later this week. This is Bloomberg.
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance, good morning. Interesting market day, and of course we have international relations. We really begin our G7 coverage this morning. Again, Guy Johnson from Cornwall here in the next 2 days as well. Futures up 2, Dow futures negative 42, but NASDAQ 100, like it did yesterday, really with a bid underneath. It'll be fascinating to see what this how this works out. And again, we saw a 149 handle moments ago on the 10-year yield. Clearly the statistic of the day, with Brent crude near 73, 72, $55 weaker this morning. On the stocks, the very meme-ish Romain Bostic.
Yeah, two things everyone's going to be talking about today. That chart you have on the screen of the 10-year yield, and of course the meme stocks, which continue to rise. The three biggest movers right now, pre-market on a volume basis, are probably three stocks that most people, at least a few weeks ago, weren't paying much attention to. Context Logic, that's of course the operator of the Wish website. That's up about 39%. People have started to move into that stock yesterday. It rallied about 40%. Now getting a nice little pop here in the pre-market. Of course, Clover Health has been on a run now for several days, up basically has tripled now over the past 3 weeks, up about 22% here pre-market. And the newest kid on the block appears to be Clean Energy Fuels, up about 31% here in the pre-market. If you're looking for a reason, a catalyst as to why any of these three stocks are actually higher, up by double-digit percentage points, I don't have a reason for you. And most of the people that we talk to here on Surveillance and the other Bloomberg properties also don't have much of an explanation either. You flip up the board, you take a look at some of the other movers. There are some more fundamental stories out there. You take a look at Campbell Soup. Look at that, Campbell Soup. We go from the meme stocks that no one's ever heard of to, of course, the OG stock. I'm sure you remember this from your childhood, Tom. Campbell Soup has been around for a while, 45, 25.
Yeah, Romain, this has been a train wreck for 30 years.
It's been a train wreck for 30 years. It's not getting any better. It seems to get a little bit of a pop every now and then when people gravitate back to consumer staples. But, of course, with the latest earnings out, those shares down about 8% here in the pre-market. We are going to get earnings out of GameStop, of course, one of the OG meme stocks. Those shares up fractionally here on the day. Believe it or not, people actually do care a lot about the fundamentals here. You're talking about more than $1 billion in sales being projected for the quarter. But keep in mind, if they hit that target, this is going to be the first quarter that you've seen revenue growth on GameStop in about 3 years. So that's a pretty significant deal, and it's a lot of the reason why a lot of people started piling into that stock late last year and early into this year. And finally, keep an eye on UiPath. This is a company that went public recently. This is its first earnings as a public company. This is an automation software company. You know, all those tedious tasks like data entry that we used to sort of give to human beings, this is now being automated by that software. This was a big deal when this company went public. It's run by a former Microsoft engineer. Those shares down about 10.5% here pre-market, Tom.
Romain, thank you so much, particularly there on the meme stocks. We'll be following that. Paul Sweeney and I will have a lot in that in the 9 o'clock hour. Long ago and far away, right after the Ming Dynasty, on my first trip to China for Bloomberg, I was advised, meet with BNP Paribas. The French bank has a magisterial history in China going back to 1860, riding herd on global markets out of their Shanghai office. Their lead office in China, I believe, is George Sun. And we're thrilled that George Sun could join us this morning on the markets on China. George Sun, I'm not going to mince words. We've got overnight repos, a wall of cash in America we don't know what to do with. I believe China has the same wall of cash out there. What is China doing with its wall of cash?
Good morning, Tom. Good morning, Lisa, Romain. Thank you for having me. The excess liquidity is a story around the world. But in China, we're starting to see a bit of inflation, actually. Just earlier today, China's May PPI numbers came out. They surged 9% year on year, which is way above the estimate and reached the highest level since 2008. So there's definitely inflation, right. But a lot of that is imported though. The commodity prices are really putting a kind of a corkscrew into the recovery here in China. You know, China is the biggest consumer of a lot of the global commodities. 50% of the global demand for copper, iron ore, etc. So that's really causing the producer prices to rise. But the main difference between China and the U.S. right now is the CPI actually has not been rising. So the CPI is actually quite timid in China, only about 1.3% growth. So the consumer demand isn't there. The government hasn't given a lot of stimulus to the consumer, so they're very cautious still. So the recovery is very kind of trepidatious right now.
George, with a heritage of BNP Paribas in China, how does China from Shanghai, from Beijing, how does China look at the Europe and the United States differently?
Oh, wow. I think China wants to be more integrated into the global economy, welcomes global investors. I think, welcomes kind of better relations with both Europe and the U.S. Obviously, there's been some geopolitical tensions between the U.S. and China, but I think that will come and go as the number one and number two countries in the world. Europe, however, has been kind of much more neutral towards China, and we see a lot of investments. Europe is China's biggest trading partner, actually. So the various countries in Europe are actually very actively trading with China, both in financial products and also in material products. So, for example. Oh, go ahead.
Well, no, I was going to say that as, the trade does increase, there's a question of whether China still has the same sort of dominant role in the commodities market as it used to. And I'm thinking of this in particular with what you just mentioned, the idea that factory prices increase, the input prices increased the most since 2008 in China. And then China, in response, is trying to crack down on higher commodity prices, including coal. So how much of an effect can they have on bringing down commodity prices single-handedly when the infrastructure push moves beyond China to the other developed world, including the U.S., including Europe?
Lisa, you're absolutely right. Even though as a percentage they consume a huge amount of commodities, it's the marginal demand that's going to drive the price up, actually. And what we're seeing now is the rest of the world starting to open up, developed countries like the U.S. and Western Europe opening up. So you're going to see the demand for other commodities, for lumber, for copper, for iron ore, pick up in developed countries. That's going to drive the overall global prices up at the marginal level. And at the same time, the supply of some of these commodities are still struggling to keep up because a lot of these major commodity producers are in EM countries where the vaccination rates are lagging behind. So it's kind of a race right now between the economies opening up and inflation. So until the economies can open up and grow faster, including the emerging markets, you're going to see commodity prices pick up. And China, as a consumer, doesn't really dictate the prices as much as it used to.
All right. Well, a lot of folks here in the U.S. are still keeping an eye on what you guys are doing over there with regards to the commodity side of the equation. They also want to know, George, what's going on really with the tech side of the equation as well. We still sort of remain mired in correction on some of the key tech indexes over there. And a lot of people are wondering whether it's safe, whether Chinese tech stocks offer a bit of safety, will offer that bit of growth, given some of the regulatory concerns, I guess, that have been raised over the past few months.
Oh, that's a really good question, Romaine. I think when we look at tech in China versus the U.S., inflation has hit both a bit recently, but I think China has been hit a lot more because China got kind of hit with a double whammy. There was rising inflation, but also China imposed a lot of anti-monopoly measures against the tech companies, against the Ant Financials, Tencent, et cetera. So it's actually a much bigger decline. So NASDAQ, since the peak in February, NASDAQ is down only 2%. It's basically flat. But the Chinese Hang Seng Tech Index is down 27%. That's a major correction. So what we see, there is some value there, and there's been some more recent noise that perhaps the government's leaning back a little bit and allowing these companies to form financial holding companies, be regulated, and therefore be able to get back to business again.
George, I don't want to get you in trouble with your general counsels in Shanghai and Paris, but let's try for it right now. Do you buy the migration from Hong Kong to Shanghai, given the political events of the last 2 years?
Well, I think as China grows and expands overseas and attracts international capital, it's bound to have more than one financial center. I think Hong Kong's been the financial center for a long, long time, the gateway in and out of China.
Will that shift to Shanghai?
I think they could have two financial centers. So, I myself, I travel back and forth all the time between Hong Kong and Shanghai. So I think what ends up happening is they both serve a very useful purpose for China to open up. I think Shanghai is obviously on the mainland. It's very accessible to all the domestic fundraising, including the Starboard that's opened up for the tech companies in Shanghai. But Hong Kong still remains very, very popular among a lot of the multinational corporations. So I think it's good to have both, actually. And for the foreseeable future, you're going to see two currencies. You're going to see the onshore renminbi, but the offshore Hong Kong dollar and the offshore renminbi. You're going to see the stock market through Stock Connect and the bond market through Bond Connect really connect both sides until it gets better integrated, I would say.
George Son, valuable. Thank you so much with BNP Paribas this morning. Lisa, I learned a lot there.
Yeah, I think that it's one of the most important points, and I think that this is one of the most underplayed aspects of global markets right now, is exactly what George was saying, that actually China is going in the opposite direction with respect to expanding liquidity. They're actually taking liquidity out of the markets, which has been a big question behind the bond market. How long can it continue to remain steady? How much are we going to see a decline there and yields go higher?
It really will remain one of the themes to the end of the year, besides everybody's guesstimate on what the U.S. will do, is do we see a nascent resurge in international equities, and particularly Pacific Rim equities?
Yeah, and well, we see a lot of people still talking about that. There was that pullback, I think, back in March and a little bit earlier in February, where people really started to sort of question whether there was stability over there. But now I think a lot of people have gotten comfortable with the language that's coming out of Chinese regulators. They've gotten comfortable with the position of some of these Chinese companies, and they've gotten comfortable, Tom, I think, with the geopolitical dynamics here. The idea here that the growth still is there and there's still opportunities for American companies and American investors over there.
Briefing you on the 10-year yield with a 149 handle, right now 1.50. If you're on radio and television, if you're part of Global Wall Street, coming up, I believe on short notice, we have our Ira Jersey, our head of our fixed income operation. Ira Jersey is encyclopedic, particularly on short-term fixed income dynamics. And I'm just going to state it. If you're part of Global Wall Street, this will be your conversation of the day on fixed income. We follow that up. We stay strong with Sam Stovall of CFRA, their chief investment strategist. For those of you watching, the president will be covering this, of course, in our entirety for the next 3 days. The G7 meetings, and as Ian Bremmer said, the first meeting since the beginning of the pandemic, the symbolism of Chancellor Merkel's final meeting and the first meeting for the President of the United States. I believe in the next hour we'll see Marine One lift off from the White House. Stay with us again. Futures up 2, Dow futures go the other way. The VIX 17.26. Romaine Bostic in for John Farrell, Lisa Bramowitz, and Tom Keene. Stay with us on radio and television. This is Bloomberg.
Your First Word News, I'm Rishka Gupta. Joe Biden's first overseas trip as president will focus on increasing the availability of Western coronavirus vaccines abroad. The president leaves this morning for the Group of 7 summit in the UK. Both he and British Prime Minister Boris Johnson want to rally the G7 behind a plan to make more shots available to low-income countries. That could counter China and calm allies unhappy with the US over its hoarding of coronavirus shots. And the U.S. is appealing to Iran to accept what it calls a mutual return to that landmark 2015 nuclear deal. World powers are gathering in Vienna for a 6th and possibly final round of talks. They're trying to persuade Iran to accept a cap on its atomic program in exchange for a lifting of U.S. sanctions. President Biden and European Union leaders will commit next week to ending outstanding trade battles, according to a draft seen by Bloomberg News. The two sides will promise to remove tariffs related to steel and aluminum conflict before the end of the year. They'll also agree to resolve that dispute involving Airbus and Boeing that has lasted for almost 2 decades now. An electric vehicle maker, Lordstown Motors, may not have enough cash to get its debut pickup truck to market. And the startup that recently went public warns that it may not survive the next 12 months if it can't raise more capital. Lordstown operates out of a shut-down General Motors plant in Ohio. And strategists warn that another bad week for Bitcoin could be a precursor of more pain. The world's largest cryptocurrency down about 10% this month to roughly 33,000. Bitcoin is worth a little more than half of what it was in April when it hit a record high. And several analysts say that dropping below 30,000 could lead to a dive to 20,000. Global news 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
You're in a global craps game where everybody's talking to each other and they're having a blast. It's just a lot of it's fun. Now, at every crap table, 70-80% of the people are having fun and know they're going to lose their money and accept it. And there is somebody who's going to lose their mortgage or try to hitchhike home or lose their college fund. It's sad. I think a lot of the meme stocks are people having fun.
Ken Wallace, their founder, chairman, CEO of Wallace and Company. Romaine Bostic for John Farrell. Romaine, I'm going to assume that Mr. Wallace doesn't own Athlon Medical.
Athlon
8
Medical.
employees.
8 employees. Well, right now it's up about 256% here in the pre-market. This is a small cap stock. Yeah, that's just it. This is a small cap stock, less than $100 million in market value. As of yesterday's close, it's going to be a lot higher if it opens here. Who knows, Tom? This actually got touted touted on Reddit here. There seems to be a lot of talk about some product, medical. I can't even pronounce it, but who knows?
Yahoo Finance writing it up here.
Yeah.
Chemo purifier.
Chemo purifier. That sounds legit.
And all that.
Did you see what Jeff Gunlock said yesterday about meme stocks? He said it's playing with fire. Don't even get involved. On the shorts, on the longs, don't even get involved.
He probably has 7,000 shares of Athlon. He bought it from Faro. Right now, what we're going to do is equities and then do bonds. Ira Jersey to join us in a moment, but very quickly here on fundamentals and not memes, we are meme free with David Wilson. What do you got?
What I'm talking about today is what's going on within the S&P 500's component stocks, and it's something that J.C. O'Hara, who's the chief market technician over at MCAM Partners, pointed out in his latest note. Looking at something called the cumulative advanced decline line for the S&P 500. So
more
cumulative,
going up and down.
Right. I mean, what we're talking about day to day, how many stocks up in the S&P 500, how many down, and there's sort of a running total of that. So we saw that particular indicator, which we compile here at Bloomberg, set a record on Friday, even as the S&P 500 kind of struggled to follow suit. You know, we saw it again yesterday with the index near a record toward the close of trading, but not able to get above it.
Is that breadth in the market? Is that what breadth really means?
That is one indicator of breadth, and it's perhaps a more traditional one. You can talk about other gauges. Equal weight indexes kind of get you to the same place. You know, take the S&P 500, move market value out of the equation, count every stock the same. And by the way, the equal weight S&P 500 also got to a record on Friday. So, you know, it's about the broad-based strength in the market, which O'Hara describes as a technical pillar.
I got 30 seconds because we got to go to the bonds with a yield of 149 in the 10-year. David Wilson, don't you love the value line geometric? I mean, it's just the coolest index. It's like logarithms, folks, within the series.
Well, I mean, that's it. Another example of broad market, since Value Line covers about 1,700 companies, and they're all included in that index.
I just did this so you all could see the geniosity of David Wilson. I mean, you know there's 1,700 stocks in the Value Line index? I did not know that. Yeah. Are any of them a meme stock?
I wouldn't be surprised if you'd find GameStop or AMC or some of the others in there.
In the 9 o'clock hour, David Wilson joining us with a SPAC report. Right now, Ira Jersey joins us, our chief U.S. interest rate strategist. Ira, sophisticated question. Why are yields going lower?
The economy is not as good as people think, and the bond market is leaning very short. So I think that you just have a little bit of short covering here, and we're approaching 150 is not a particularly important level on technically, but 147 is, and we're only a heartbeat away from there at this point.
So what's causing the short squeeze at this point, Ira, given the fact that we're probably going to get CPI numbers tomorrow that show inflation certainly picking up in the short term in the U.S.?
Yeah, I think it's though that the market is coming around to the idea that inflation is going to be pretty transitory. I mean, one of the big moves here is you've seen 10-year inflation break even. So the market's expectation for what inflation is going to average over the next 10 years come down about 10 basis points in the last 2 weeks, and I think that that's endemic of the idea that we don't have the labor market quite as strong as people had hoped. We still have retail sales that are spotty overall, and even if prices in some sectors are going up, there's still a lot of large sectors that are going to see prices actually start to stabilize over the next 3 or 4 months.
So a few weeks ago, when everyone thought that the data was actually good and would continue to be good, Ira, we had actually seen a little bit of shortening in duration in a lot of folks' portfolios, at least folks that we talk to here on the network here. Does that duration shorten further, or does it go in the opposite direction?
Yeah, well, I think everyone was kind of leaning short. So you had people in curve steepeners, you had people, outright short duration. So in the shorter end of the curve and selling longer term stuff. So a lot of that is starting to unwind. You look at futures positioning, and you see a lot of long duration positions by speculators are starting to be cut, pretty significantly over the last couple of weeks. And I think that kind of activity is just showing that this is not going to be a one-way street. It's not yields go from 1% up to 2.5% all at once. I think eventually they will, but you're going to see these long periods of consolidation until there's clear and convincing evidence that the economy is going to be on strong footing and that the Fed's going to do something like taper. I think the issue you have with the data being as uneven as it has been is that monetary policy is likely to be on hold even longer, and I think that that's one of the factors that's driving this short covering rally.
Ira, you started your comments by saying the bond market is saying that the economy isn't as good as it seemed, and that this is sort of the confirmation that we're seeing in the move today. Other people would say baloney. It's because the Federal Reserve is buying $120 billion of bonds every month and will likely continue to do so, and that is the entire reason, because otherwise these yields would not make sense given where inflation already is. What's your response to that? Is this all the Fed action?
Well, it's not definitely not all the Fed action, because if that was true, then yields would never have sold off in the first place, because they haven't stopped buying the same amount. They've been buying the same amount of bonds now for almost a year. So it's not that, but it is the idea that maybe they're going to buy more for a longer period of time, that maybe taper will be delayed. The market expectation is sometime in the first quarter of 2022 they're going to stop their bond buying. They'll start to lay that out in the second half of the year. I still think that will happen, but I think the risk now is that with the data being so uneven, that maybe that gets driven out even further, and that it's not the actual pace that they're buying now. It's more how much in aggregate will they buy going into 2022. So once we do see the taper though, and if taper talk starts to pick up significantly, as we do anticipate in the third quarter of this year, then that's when I think you'll start to see real yields. So TIPS yields go up a lot, and nominal yields probably break 2% sometime later this year.
Ira Jersey, thanks for the brief. Greatly appreciate it. Love doing that, folks. That's what surveillance is all about. David Wilson on equities and Ira Jersey on the fixed income market. Lisa, I'm sorry, 1.4992. I mean, even Farrow would fall off his seat over that.
The idea here, though, just to sort of emphasize what Ira just said, the idea that if we start talking about tapering, that it could get to 2% by the end of the year is a pretty big move.
Yeah. I think that would shock a lot of folks here, because I think when you look at what's being priced now in the equity market, it is now either stasis or lower.
The Associated Press and their Jonathan Lemire out on Twitter. The plane is off the ground. The press plane to follow President Biden to the United Kingdom delayed 7 hours by cicadas in the engines. Who would have thought? This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents. which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacwan. We'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
The market is becoming more concentrated and less contestable.
We actually think the markets tread water for a bit as we continue to be concerned about inflation and taper talk. I think we are in a pretty unique period of monetary policy.
Fed policy is going to be probably the number one source of potential volatility over the next couple of weeks.
We have a real recovery in process. I don't think the roaring 20s are the right analogy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A surprise bond rally in a summer that was supposed to be sleepy. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Tom Keene, Jonathan Farrow, Lisa Abramowitz, John out. Romaine Bostic very much in. We start the day focused on yields. The 10-year yield going ever lower, now at 1.4975%. I'm starting the day, or starting the hour with 4 digits, Tom, because this is important and it shows the complete evaporation of inflation concern in markets.
It's a chart of lower lows. I mean, there's no question about it. Just, Lisa, in the last 10 minutes, we've rolled over ever more. And, you see the headline come out across the Bloomberg, folks. One of our red stickies, our acclaimed headlines were Brazil consumer prices. I'm looking over here at the secret surveillance TV wall screen for those of you on radio, where Brazil inflation's actually tangible. No one cares.
No one cares about inflation. They all say it's transitory and the Federal Reserve will remain on hold. Romaine, equity investors definitely getting a boost from this. I mean, we're back to Goldilocks.
And it makes you wonder sort of where this leaves the equity markets right now. You had the S&P 500 yesterday actually trade above its all-time high. Second session it's done that. Did not close above it, but it's still within striking distance. And, of course, you had the Russell 2000 only about 16 points away from its all-time high as well. The NASDAQ still needs to do some catching up. But with real yields moving in this direction, you have to think that the next leg of this rally could be there.
I mean, we have the president this hour, Romaine, and frankly, in our world, the meme event thing is maybe more important than the president. Is this meme surge different from the last meme surge?
I think so, because the last meme surge was definitely about heavy short interest and folks taking advantage of that. Most of the stocks you're seeing here definitely do have short interest, but not nearly the sort of 80, 90% and a plus 100+% that we saw on GameStop back in early January and in February. These stocks have short interest, but this is really just about people really finding, I guess, a place to put their money. And if they do it collectively, they can move prices. They've shown they can do that, Lisa. They're doing it again this morning on a lot of names that a lot of people weren't paying attention to 2 weeks ago.
And the larger question here is, does it matter, right? Is this just playing games? Is this what Ken Moelis was saying, which is people at a craps table having a good time, 70-80% know they're going to lose their money, and it's all good fun? Or is this actually consequential? And I think there's an increasing number of questions, Tom, about the composition of major indexes, about the Russell 2000 and the proportion of it that are AMC and GameStop shares, which have rallied a lot, given the fact that there has been such a huge shift to passive investing.
I want to bring on a research item, folks. Every summer there's a report, and everybody, the dirty little secret of Wall Street, folks, is everybody tries to outduel each other for the intellectual report of the summer. Here's an early nominee. Mohammed Al-Arian, moments ago out on Twitter, notes the report I talked about 2 hours ago. This is David Folkers-Landau, Peter Hooper, and Jim Reed in London with Deutsche Bank with a lengthy report on inflation where DFL says inflation is a time bomb. This is hugely influential, whether you agree or disagree with it. I just want to note, as Dr. Al-Arian notes, that this is a report that will get immediate global Wall Street attention. Futures up 5, Dow futures negative 11, NASDAQ up 0.3% as well. The VIX comes in a stunning statistic, 16.12, and again, the 10-year yield a 149.92. That's a, excuse me, stunning number. We get perspective from Sam Stovall, CFRA. Sam, what an odd and interesting time we are in right now. What research are you doing when you fall back on Stovall fundamental research? What are you studying right now in this craziness?
Well, good morning, Tom. I think first off, the question is this the roaring 1920s or the beginning of the 1970s? Because with the worry, the focus being on inflation, with all the stimulus being very similar to guns and butter of the 1960s, do we end up with a decade of elevating inflation that then has to be strangled by a more aggressive Fed? I looked to the 70s and I realized that the year-on-year change in CPI started at 5.3%, ended the decade at 12.4%, averaging around 8%. And no wonder we had the lowest compound annual growth rate of 1.6% for that entire decade.
You know, what's interesting, Lisa, is we actually listened to Deja Vu by Crosby, Stills, Nash & Young there to the original album, which is not as good as the new remastered.
And Tom will sing it for you in about a half an hour time live on Bloomberg Television and Bloomberg Radio. There is a question, Sam, though, going forward about these inflation expectations you're talking about. Are we closer to the 1970s, the roaring 20s? We take a look at earnings expectations, and they've surged. I believe we're expecting a 60% pop in earnings per share in the second quarter. Is this potentially a cause for concern given how high expectations have gotten and given the margin pressures that are coming from higher wages, higher commodity costs, and this inflationary push?
Well, I think eventually it could be, because you have more and more people who are, as you had said before, very willing to embrace the risk-on trade. One of the indicators to look at is the relative strength between the S&P 500 high-quality and low-quality stocks. And right now, people are focusing on low-quality stocks, whether they're meme or not. So when we look to second quarter estimates, about 60% gain, first thought is, well, that's a pretty high bar. You can only be disappointed by that. However, the bar was set at 15% in the first quarter, and we ended up eclipsing it by having a first quarter gain of more than 40% in earnings. So I think with the 32% full year expectation, investors are saying that this economic expansion, because of very tight labor markets, really has only room to move, John Mayall song, in the future rather than contracting.
All right, I don't have any songs.
Bring a song in here. Come on, Romain, keep up.
I'm trying. This is a tough show to keep up with. Sam, I am curious. So when we talk about a lot of folks who had to sort of embrace some of those cyclical names on the idea here that the economy was sort of revving into sort of another gear here, at least at some sort of sustainable growth rate, and now that may be at least in question, at least in the short term here, does that take some of the bloom off the rose of some of those cyclical names, or do you sort of stay wedded to those, to that sector?
Well, Romain, you're bringing up a good question, because now with interest rates coming down, we're seeing a rotation back into small caps, back into technology, back into growth itself. But I think that could end up being as transitory as the expectation for inflation is. going back to 1970, if you look to what happens in a steepening yield curve environment, it's energy, financials, industrials, and materials in that order that tend to be outperformers, which were exactly the sector rotation that we saw from the end of the last near 10% decline in September of last year through the recent high on May 7th. So I think near term, yes, we'll probably see that rotation into growth, but longer term, I would stick with a rising yield curve environment.
What do you do with big tech? I mean, come on, Sam, cut to the chase. You're writing a fancy report. You got 5 stars, 4 stars, 3 stars, and all that. What do you do with those big tech names? Do you sell them? Do you keep them? Or do you buy more?
I think you keep them, and I think that should we end up with some sort of a swoon, not necessarily starting in June, then you use that as a buying opportunity, because our belief is that while the CPI number could come in at 4.5%, 4.7% tomorrow, it'll be down to about 3.5% by September. So our belief is that we're not going to be seeing a spike in inflation, but a more moderate upward trajectory in both inflation and the 10-year yield.
Sam, how much do you trade on the idea that taxes are probably going to be higher for corporations going forward?
Well, I think it's a possibility, but when you look to history, you look to changes in capital gains rates. We've had 10 periods going back over the last 55 years. And in 9 of those 10 years, we had positive total returns for the entire calendar year, with the average being about 11% gain. So usually there's a lot more moving parts to the market itself than simply a change in the tax rate.
Sam Stovall, thank you so much. Greatly appreciated this morning on the equity markets. I'm going to tell you, folks, there's a grind to it. Maybe Dow futures just going green there for a second as well. But it's just a stunning market, this grind higher that we're seeing for those like me in triple leveraged all cash as well. So we did some songs there, Lisa, and I mean, come on. I mean, you were born to sing Katy Perry's Pendulum. I mean, yeah. it's just there.
Yeah, if you wait on 12:30 a.m. on Sunday night, you'll catch me singing Pendulum by Katy Perry.
12:30 on Saturday night as well. Yeah, probably having your Keel's potato vodka seltzer.
Well, let's move forward. There is a question, though. The pendulum. I don't think I'm that gloomy today. And I mean, honestly, I think that there's a lot of concern.
Taking it out of you. Pharaoh beats the gloom into you.
Well, I think
is so sick optimistic, he even rips the gloom out of you.
I try.
Well, honestly, I think that there's a real question here. There is a certain hesitancy right now in markets. And yes, you're seeing equities poised to hit new highs today in the S&P, is certainly among the indexes. And yet the bond rally really is showing caution in markets, perhaps, or the belief that perhaps things aren't as good as they look for now. And that, to me, means that frankly, the shock really has to come from the Fed, Tom.
Romaine?
Well, we'll see what happens. I mean, I think the Fed shock may not necessarily be as much of a shock. I think a lot of this is being priced into the market right now. And I think a lot of people have believed what they've been hearing out of Powell and a lot of the other FOMC members.
Well, I'm glad you bring that up, Romaine, because, folks, to me, it's the ECB meeting here in a few days. That'll be really interesting. Frankly, we'll miss John Farrow's coverage on that. And then the Fed meeting is tomorrow. Thank you, Romaine.
Okay.
And the Fed meeting on June 16th, I mean, I'm sorry. Well, I thought it was like a non-event. I think I'm wrong.
I think that one of the most interesting aspects is former Fed officials, one after another, coming out and really writing scathing op-eds about the Fed's policies, saying that they are risking a huge policy error. This dissent, how much are we going to see it represented at the Fed meeting?
It's a pendulum. It all comes back around. It's a pendulum. It's a pendulum.
It's Wednesday, guys.
For Lisa, it all comes back around.
I'm just going to let this one go.
On radio and television, it is a pendulum. Stay with us. The president on the White House lawn in moments.
With the First Word News, I'm Ritika Gupta. Yeah, in just a few minutes from now, Joe Biden heads off on his first overseas trip as president. He's heading to the UK for the Group of 7 meeting, where he's going to focus on increasing the availability of coronavirus shots to lower-income countries. After the G7, the president will attend NATO and European Union summits in NATO. Then he'll meet Russia's President, Vladimir Putin, in Geneva. A group of Democratic and Republican House members has come up with its own infrastructure spending plan. It calls for a total of $1.2 trillion in spending over 8 years. President Biden has put forth a $1.7 trillion proposal, but the president ended talks with Republican Senator Shelley Moore Capito yesterday after they failed to agree on a spending plan and how to pay for it. And the Senate has overwhelmingly passed a bill to help the U.S. compete with China. It calls for investing almost $250 billion to bolster manufacturing and technology. It was a rare spot of bipartisanship in an otherwise polarized Senate. Still, the bill's fate in the House is uncertain. In the UK, Chancellor of the Exchequer Rishi Sunak wants London's financial district to be exempt from that global tax deal next month. Sunak is expected to make the case that financial services should not be included in a plan to make multinationals pay a minimum corporate tax rate of 15%. That includes global banks with head offices in London. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
transparency of debt contracts would be a big step forward for China. We welcome their membership and shareholding in the World Bank. They're the third biggest shareholder in the World Bank, and we're engaged in China with our programs.
David Malpass of the World Bank with a terse economic report yesterday. They minced no words about it. The World Bank in their wheelhouse of a struggling world economy, particularly Africa, and they made clear the disparity between the haves and the have-nots within this pandemic is exceptional. It was really quite a heated interview with Mr. Malpass. In this 8 o'clock hour, Wall Street and Washington time, we're waiting for the President of the United States. He has left the White House. We should have images of Marine One on a tape delay here for all of the press in a moment. And it is Andrews Air Force Base. Air Force One awaits this president for his first trip abroad. Again, more than just a visit to Cornwall and the G7 nations. He will make the grand tour as presidents do, including an appropriate moment with the Queen. Terry Haynes with Lisa Bramowitz, Romaine Bostic, and myself, thrilled you could be with us this morning. Futures mix, much like yesterday, but the yield front and center here, the yield indicating the oddest of American economies, 1.50%. Terry Haynes, every president goes abroad and then they come back. I love what Politico says today on the ghosts of the legislative graveyard. What does the president come back to in Washington?
Well, what the president comes back to is, I think, approbation, positives on handling of the coronavirus, including how he'll continue to talk about United States leadership there in the G7. I think he comes back to gathering momentum in a positive way on infrastructure. I think on G7 and the taxes, I think that people need to understand in markets that there's far less here than meets the eye, and Congress is unlikely to take that up. And that on semiconductors, what Washington has done largely is throw money at a problem instead of trying to fix immediate issues in the supply chain or anything else.
Terry, you're our expert on conservative gridlock. Are we in gridlock now, and is it a new gridlock?
You know, I always think that there's gridlock there's gridlock anytime that the progressives on the left and the conservatives on the right ball things up. But when the center of both parties come together, as they have on as they have on COVID spending, and as I think that they're still likely to do, about 60% likely to do on infrastructure spending, then you don't have gridlock. But you know, those are short-term agreements that can continue to exacerbate longer-term problems like the debt, the deficit, and may feed into the inflation problem you were just talking about a few minutes ago.
Yeah, we're looking at live pictures here on the television of Marine One landing there at Joint Base Andrews. Terry, what is the clout that President Biden and the Americans overall have on the international stage right now?
Hi, Romaine. Well, it is, I think, somewhat of a well-meaning trope to say that President Biden is reestablishing leadership. What he's trying to do is use a different form of leadership that is a lot more collegial than the previous administration, which was set off by a lot of frustrations with European countries not paying their defense bills and not doing this and not doing that, and trying to reset the relationship. President Biden is resetting the reset, but but he's got one big plus, which is that the nature of concerns with China and Russia are both focusing minds in a way that hadn't been done over the past few years, and that's really the nature of American leadership here, is to try to find common solutions to those fundamental problems.
And when you talk about focusing minds, it's not just internationally, but also nationally. We saw that $250 billion plan passed by Senate yesterday on a bipartisan basis to help support certain industries in the United States to become more competitive against China. How material is that in your view?
You said in the last hour that you thought you expressed the view that it might be rearranging the deck chairs, and I think that is true to some extent. Markets need to understand that this is what the Endless Frontier Act, as it's called down here, is all about, is about long-term issues, and that's perfectly fine. But at the same time, there is no there are no answers, and none expected really, in a facile sense, to the immediate supply chain problems, the immediate rare earths problems, all the other issues with semis, much less the other issues with China. So, what we're going to be doing, and there's no view in Washington as to why we need to be throwing money at the semiconductor industry, which last I saw didn't really need money to be thrown at it. So, it is the long-term problems that are being addressed, but not the short-term problems, and that's what markets need to understand.
Markets are also trying to understand policy and headlines that sometimes seem confusing. Yesterday, we saw that talks broke down. Talks ended between President Biden and Shelley Capito, the Republican senator leading the bipartisan efforts. You wrote a report promptly thereafter saying, "Don't believe tonight's erroneous press headlines. The infrastructure talks are ending. They are not. They'll now continue with an expanded bipartisan cast of characters." What is the distinction of this new bipartisan discussion from the one that had been being had between Capito and Biden?
Well, no sooner did I write that report than than a bipartisan group, including that in the House, the so-called Problem Solver Caucus, and in the Senate, including Senators Cassidy of Louisiana, as well as apparently Democratic Senators Manchin and Sinema, came out with a proposal of about 1.2 trillion over 8 years, which is now getting into my bogey of a deal at 1.25 to 1.5. But what's important to understand here is very simply two numbers. This group and President Biden are now $500 billion apart overall, and they're $250 billion apart in new spending. So we're on the way to a deal getting done, I think.
Terry Haynes of Pangea with us, and he will stay with us right now. We witnessed the President of the United States as he begins his first trip abroad, this to the G7 meetings in Cornwall, very much southwest of London as well. The President now leaving Marine One from the White House with Mrs. Biden. And they will, of course, leave on Air Force One. A bit of a flap for those of you worldwide. The East Coast and out to Ohio of the United States invaded by cicadas this summer. And the press plane had a near 7-hour delay, according to Jonathan Lemire at the Associated Press, out of Dulles. Dulles is west of Washington, much more towards the farm fields of the cicadas. The president is moving east towards the Atlantic Ocean at Andrews Air Force Base, or Joint Base Andrews. The president here going to a G7 meeting, and as we heard earlier, this is someone very familiar with G7 politics. Lisa Abramowitz, Ian Bremmer making very clear we couldn't have a vice president more understanding of an Atlanticist approach.
Yeah, although the question is how much weight that will carry based on the actions of the United States, but based on President Trump's administration, and frankly, that it began several presidents before that the U.S. started to depart from the rest of the allies, from the rest of the European continent. There is a question of what President Biden can do to restore those alliances at this point without some sort of material legislative action, Tom.
Images everything as he comes off Marine One, where they wear dress blues to pilot the helicopter with the Air Force at Marine One. This is a president tireless. I mean, the look is everything, Lisa.
Yeah.
I mean, he looks like Romaine Bostic casual on the weekend. He's got his 70 aviator glasses going.
But it is important. This is his sort of, common man look and the common man appeal, and how much that's going to read in Europe at a time when the U.S. is trying to restore his relationship is going to be important to see.
He seems to be fired up. He's coming over to speak to the rest. For those of you on Bloomberg Radio, we're going to try to listen in here. Maybe we'll hear something from President Biden.
Strengthening the alliance, make it clear to Putin and to China that Europe and the United States are tight, and the G7 is going to move. Thank you.
Mr. President, do you expect to come out with a vaccine strategy for the world?
I have one, and I'll be announcing it. Thank you.
Expect that Putin will be able to work out any kind of understanding with you on the cyber attack?
Who knows? It's going to be a subject of our discussion.
Terry Haynes with us with Pangea, Romaine Bostick for John Farrow and Lisa Bramutz. And again, we're watching the markets here. But Terry Haynes, I can't help but note that every step of this trip, including how he walks with the Queen of England, will be as compared to President Trump. There will be a comparison made every step of the way.
I think that's true, yeah. And, what's likely to come out is, President Biden is a lot of things, but one of the things he is pretty comfortable in his own skin after a lifetime in public. And as Lisa points out, and you were talking earlier about the style being important, that's sort of kind of relaxed but focus at the same time. Will generally go over well. And as the press secretary said yesterday, and I thought was entirely appropriate, the idea that he gets to look people in the eye for the first time as president, and that any group of leaders get to look at each other in the eye in person for the first time in over a year is hugely important. And so it is not, I don't want to over dramatize this, but it's not too much to say that there's a potential inflection point here geopolitically, and that's probably a good thing.
Terry, President Biden is restoring or trying to restore alliances at a time of a very different dynamic on the European continent and beyond. The idea here of Brexit, and the United Kingdom has a very different relationship right now with Brussels than it's had in the past and pre-Trump. What's your view on how he plans to bridge this tension between the UK and the continent?
I think there's an understanding in the American government that that the UK and the European Union are working their issues out. You see a lot of tensions, most recently on import-export of sausages, which has given rise to lots of, as you would expect, lots of funny headlines in the UK and European press. But there's still a back and forth tension on the commercial relationship, but at the same time, there's an understanding that there's much more there that binds them, that divides them, firstly, and secondly, that the UK and Europe together will be united on big issues. Biden's task is frankly to try to help cement that, number one. Number two, he's got to try to smooth over the divides between big nations in the European firmament and small nations in the European firmament, and that gets to the heart of his G7 trouble. The finance minister deal is what it is, but it's wishing and hoping, in my view. As long as you've got what I call the Ireland problem, an agreement like that is going to be very tough to come up with.
And Terry, we heard that from the leadership of Hungary today, who just made it real clear, quote, absurd. Terry Haynes, thank you for this perspective, this historic moment for the Biden presidency. We've got an historic moment as well in the market. We've got Romaine Bostick with us, is looking at the meme stocks. I noticed it's Clover, Romaine, actually moved out even further this morning.
Yeah, I mean, you're looking at these stocks up 20, 30% here on the day. The meme stocks continue to sort of dominate, at least on a volume basis. But of course, we can't ignore, I guess, what we can consider, I guess, the more larger, legitimate type of stocks there. Keep in mind, just yesterday, you had Target closing at a record high. You had Google closing at a record high. And you have a lot of other of those big cap names either camped out right near their record highs or making a push towards them here. So that can't be ignored here, Tom, in the context of all of the macroeconomic concerns right now.
The capitalism marching forward, and now green on the screen across the board. S&P futures up 5, Dow futures up 2, the VIX under 17, 16.99. Lisa and I watching more than anything today, a yield lower, stunning consensus, 1.5009 in the 10-year yield. We had a 149 handle as well. The president on Air Force One at Andrews Air Force Base. We welcome all of you on Bloomberg Radio across this nation and on Bloomberg Television with a worldwide view to the G7 meetings. And joining us now is someone who has the courage to take a longer perspective. Claudia Sahm is one of the most interesting practicing economists in the nation with the Jane Family Institute, formerly with the Federal Reserve, and always controversial. We're thrilled that Ms. Sahm could join us this morning. Claudia, I love your morning report where you say, look, would everybody grow up and stop looking at weekly claims, stop looking monthly, thinking monthly. You want us to have the courage to look out a decade. What do you mean by that?
Well, I follow every shred of data just like anyone else who's doing macroeconomics right now, but I am so frustrated with the fact that we can't even set the latest numbers in the context of the pandemic, let alone the decades of trend that we have seen. Inflation is just one example, has trended down decade after decade. Trends do not reverse in a month or two. Like, this is absurd. And we also, and this is very disconcerting, have seen for decades fewer people working. I mean, the employment to population ratio, if you smooth across the recessions, it's been going down.
Claudia Sam with us again as Air Force One begins a flight 3 p.m. this afternoon. President and the First Lady will be at Royal Air Force Mildenhall in the United Kingdom, and then on to Cornwall in the G7 meetings. Very impressive. They're going to go to Tregenna Castle. I think that was in Poldark as well. Claudia, G7 meeting speaks to the international economy. Where does the U.S. fit in right now after the Trump years? The president clearly wants to reassert a Biden tone internationally. How would you suggest his best practice would be?
Well, it's time to lead, and it's time to work with these other countries. It's just like this moment in the pandemic. We are not going to be on track until the least privileged among us in the world community are on track. And the United States has a responsibility, a moral responsibility, to help people get out of the pandemic and the vaccines. But there's a leadership in the global economy that frankly starts at home and investing in the United States and its people. Like, that's an example we need to set for the rest of the world.
Let's tie the idea of the global stage with the domestic one, the idea here of inflation being an international story. And one reason why people say for decades inflation's been coming down is because of the disinflation that was imported from China, the idea that there could be some cheap labor and cheap goods that the U.S. was importing. We are seeing a shift in that. How much does that change the underlying premise that inflation will not pick up if China is a wealthier nation that's seeing inflation itself pick up?
Right. Well, I think it's important, especially as we watch the month-to-month numbers, to know that we have different cross currents, right? Deflationary pressures, particularly now that we are still in a pandemic around the world, they are with us. Now, obviously, there are supply chain issues that have come from the pandemic that are pushing against it. So it's kind of a race between the two, but I'm betting on the longer run trends, and it may change. Like China, it may shift around the world, but it's going to do so slowly. We're not turning on a dime here.
Yeah, well, there is a question, especially as we emerge from the pandemic, and President Biden, among his comments, saying that the world vaccination strategy that he's going to detail in his trip to Europe. He is making comments as he heads overseas for the G7 meeting. Claudia, going forward, what is giving you conviction that you are right and all of these former Fed officials and others who are coming out and warning against being too sanguine about inflation are wrong?
So I'm a good forecaster, and I've trained with the best in the world. I mean, the Federal Reserve, they take inflation very seriously. They think about the data. Frankly, the staff did better forecasting than the Federal Open Market Committee for years, telling them you're not getting to unless you do something. So I think there's a thoughtfulness, a grounding in data, and an understanding that supply chain issues do tend to be temporary. We live in a very different world, a very different economy than in the 1970s. And while I think inflation is going to run year over year around 3% the rest of this year, that's a good sign. That is a economy getting back on track, getting people back to work. And I want people to write down their numbers so we can have a conversation.
Yeah. Do you think that there would be, if we got to say 3% or anything around there, Claudia, do you think that there would be any conflict with an inflation rate at that level and I guess the other side of the mandate here, which is, of course, getting that full employment level, whatever that may be at this point?
Right. Well, they're both pointing in the same direction. Again, if we look back last year, inflation was running around 1%. The Fed says it wants on average 2. I mean, the last time I checked, 1 in 3 averaged to 2, right? So the Fed is on track, and we have millions of people who are not on the job. So their mandate's pushing in the same direction.
Right. And
I really struggle to see the conflict here.
as part of that mandate, though, do you think that there's going to be a more focus on the quality of jobs rather than just that aggregate number?
Well, there should be. That's what full employment is. I mean, if you go back decades and decades, it wasn't just about having a job. It was having a job at a livable wage. And frankly, I'm surprised at some of the movement we've seen, not just in wages, but getting people, more regular hours. I mean, there are so many things we can do in the labor market to make jobs better that are frankly no-brainers. And we should have been there before the pandemic, and we weren't.
Claudia Sahm, thank you so much. We've got to keep it shorter today because of the president's trip, but greatly appreciate it. Claudia Sahm, I can't say enough, folks, about following her on Twitter just to get her thoughts on the present economic data and the longer view as well with the Jane Family Institute. Lisa, the president taking off here to Cornwall as well, and the history that he drops in on is really, really extraordinary. I was not aware of this. So many, Poldark was shot there, and I think Johnny Depp in Pirates of the Caribbean. He and Mrs. Biden, I mean, they can go to the Sloop Inn in St. Ives, and I mean, it's only back, Lisa, to 1312.
Tom, is this Wikipedia? I'm really curious. Do you actually know all of this information about Cornwall? Because I'm impressed. But I will say, Romaine, preparing for this show is always an interesting moment. I guess it's watching Poldark.
But this goes
for this? I didn't realize I was supposed to.
Yes.
Romaine, this goes to Claudia's comments as well, because Cornwall economically is very distant from the boom of London and the greater London area. And there was a bit of an uproar for this G7 nation, these meetings where the hotels, some homeless people were reportedly pushed out to get other staffing and security in. So he parachutes into a microcosm of the inequalities that we see in the United States.
Yeah, in all seriousness, there is a lot of symbolism to the site where this is going to be held. And we talk about this a lot, of course, from the perspective of Biden and his European allies, the Canadian allies, the Japanese allies. But we also have to look at it, too, from the context of what's going on between the UK and Europe. Those negotiations and the tenseness that we've seen over the past, really the last 4 years now, between them, that continues there. And I'm actually keeping a little bit more of an eye on that rather than just what Biden himself is doing for the U.S.
Yeah. Well, in a way, Lisa, away from the G7, it's a G20, isn't it?
Well, and actually, that's what I was going to say. It's telling that you talk about the inequality at a time when Joe Biden is saying he's going to announce a world vaccination strategy on this trip. The idea here that we are kind of in this together. If you start to have an ongoing and widening disparity between wealthy countries and poor ones, that's going to hamper growth for everybody. And we increasingly have seen it is very much a global economy, and we cannot get it off the ground to its full potential without everybody. And I think that that's going to be an ongoing theme, albeit with a lot of competitive undertones throughout the meeting.
In the spirit of the Sloop Inn in Cornwall, let's do a group data check. I'll do equities. Futures up 7, green on the screen, and improving tape here over the last number of hours. Romaine, what do you see in the foreign exchange market?
In the foreign exchange market, well, you got dollar weakness once again, down about 0.2% on the spot index here. You take a look at what's going on with the yen, and you actually saw a lot. We've been talking a lot about what's been going on down in Latin America. I know that's not big here on the show, but keep an eye on what's going on with the Peruvian sol, the peso as well down there. A lot of activity.
I'm going to take a look at 10-year, and that's where the action is. And frankly, that's look at that. 1.4874. The momentum is to the downside with yields price higher, definitely coming close to that 1.7% resistance that Ira was talking about. We're going to be speaking with Greg Peters, PGIM Fixed Income, coming up on the open in the next hour. Very curious to see how much further downside momentum people think that yields have here, price higher as people sort of shrug off the threat of inflation, Tom.
Credit Suisse doing what everybody else is doing right now. Handsome Greg Peters will be with us on radio and television, but what I'd really note is Credit Suisse out with headlines moments ago. I love this. To reward some managing directors, and other staff. It's a sign of the times, to say the least. Some departures, but also retention bonuses offered. Stay with us. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. The U.S. is appealing to Iran to accept what it calls a mutual return to that landmark 2015 nuclear deal. World powers are gathering in Vienna for a sixth and possibly final round of talks. They're trying to persuade Iran to accept a cap on its atomic program in exchange for a lifting of U.S. sanctions. President Biden and European Union leaders will commit next week to ending outstanding trade battles. According to a draft seen by Bloomberg News, the two sides will promise to remove tariffs related to a steel and aluminum conflict before the end of the year. They'll also agree to resolve that dispute with Airbus and Boeing that has lasted for almost 2 decades. And 4 months ago, the failure of the Texas electric grid sparked a backlash against clean power. Now the state is on pace to have as much green power development in the coming years as the next 3 states combined, $20 billion worth. That's according to a clean energy trade group. After the Texas power failure, there was speculation amongst conservatives that frozen wind turbines were to blame. An electric vehicle maker, Lordstown Motors, may not have enough cash to get its debut pickup truck to the market, and the startup that recently went public warns that it may not even survive the next 12 months if it can't raise more capital. Lordstown operates out of a shutdown General Motors plant in Ohio. And strategists warn that another bad week for Bitcoin could be a precursor of more pain. The world's largest cryptocurrency is down about 10% this month to roughly 33,000. Bitcoin is worth a little more than a half of what it was in April when it hit that record high. Several analysts say that dropping below that $30,000 threshold could lead to a dive to 20,000. Global news 24 hours a day on air on Bloomberg Quick Take. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America. BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Market is becoming more concentrated and less contestable, and more importantly, that these companies can pretty quickly have also some power in determining what we see, what we read, what we do. The concern is that you might use it not only for economic reasons, but also for political reasons.
Luigi Zingales, a great student of American capitalism there with comments on these moments we live in. Lisa Bramowitz, we got to go, excuse me, Lisa's not with me. Romaine, we got to go to the equity reality of a 10-year yield, 1.4857.
Yeah.
That's a wow statistic.
Absolutely stunning here. I mean, if you came into earlier this week, even last week, and thought that this would happen, kudos to you on your bingo card here. This is actually going to provide maybe a little bit of an upward lift here on equities. You're seeing this not necessarily as broad-based as you would think on the S&P futures here, 42.27. We should point out, though, we've seen a pretty strong bid over the last few days, primarily because of this drop in yields on some of those smaller cap and mid cap names. The Russell 2000 within striking distance right now of that all-time high. Those futures, that's your outperformer here in the morning.
The president on a trip to Cornwall to begin the G7 meetings, and then an extensive European trip after that. Somehow, I don't think there'll be a quarantine. Maybe there'll be a test. Who knows? He'll want to do that to be right about COVID. Our George Ferguson is Bloomberg Intelligence. When are we going to be able to fly to Heathrow expert? And he joins us here this morning. George, it has been an immense frustration. We put someone on the moon. We developed 2 phenomenal mRNA vaccines, but we can't figure out how to open up JFK to LHR and back. Why not? Why have we failed? It's something that simple.
Yeah, so good morning. I think, the challenge is, I think, working with governments and working with countries that all have sort of different concerns, fears, expectations. And sort of, really, each government's got to manage their citizens' desire for protection from the virus, as well as get their comfort with the vaccines and proof of the vaccines. And that's just proving to be very, very hard, right?
Will we travel internationally like we remember? Are we going to get back to what it was, or is it going to be something new?
I think we will, right? And I think we will because there's so many areas of the globe that are so dependent on travel. I mean, and I think as U.S. citizens, definitely, because we travel, many places around the globe, and I hate to be so blunt, but our money is desired in those places, right? That those travel industries are very important. And I think that's why, interestingly enough, that's where you're starting to see open first, right? You see some of those southern tier European countries, southern tier meaning the south side of Europe, open up because tourism is so important. Greece was early into that. Look, we have very close relations with the UK on business and with Western Europe. They'll open up in time and we'll find a way to get around it. It's just, I think, some of the stubbornness here. And in Asia, we have very close connections. So I think as U.S. travelers, we will travel like we did it again.
Yeah, and of course, the headline this morning is that the U.S. State Department loosening some of those travel warnings for France, Canada, and a few other nations here, George. There's also been a significant uptick here in domestic travel as well. And I'm wondering, when you look at some of these trends here, how does that fold into the idea that the plane makers will actually get back to that normal growth with regards to orders and deliveries?
Yeah, so I mean, if we're talking normal growth is what we saw at the end of 2019, 2018, Boeing, the MAX problems at Boeing notwithstanding, I think we have a while to go, right? We were doing 60 airplanes a month of their most important airplanes, 737, A320, their most important airplanes. I think we have a while to go there. We have a lot of parked fleet. Yeah. We have demand for airplanes. There's a lot of fast-growing, low-cost carriers around the world, and that's the jockey right now. The fast-growing, low-cost carriers are trying to take market share, and they don't have a lot of parked planes. They're offering cheap fares, and they're grabbing that leisure traveler that wants to travel now. And Boeing and Airbus are feeding those airlines with new airplanes. But when you go back to the more full service carriers, ones that have been around a while, they have a lot of airplanes sitting on the ground. So getting to 60 is a ways away. 30, 40, I think, we'll see that happen. 2022, late 2022, 23.
When do we start to see some of that park capacity come back, though? I mean, anybody who's tried to book a plane ticket of late knows it's a little difficult to even get a flight that you want at a time that you want at a price that you want to pay here. And when you look at some of the planes out there that aren't being used, you have to wonder, what are the airlines doing?
They're starting to bring those airplanes back, right? They're moving slow, maybe. Excuse me. Maybe they're hoping that that'll help fares out a bit. There are processes for taking those airplanes out of the desert, maintaining them and getting them going. I think the calculation the airlines have to make too is it worth doing that process to take the airplane out of the desert, maybe make up some maintenance that it needed, and will, is it worth that? And are they going to keep flying that airplane into the shoulder seasons, into the winter season? Because the big question we have is if business doesn't come back as strongly, and it's still not back as strongly. We saw a Southwest report yesterday, I think 70% of business travel still down. If it doesn't come back strongly, we're not going to have a great 4Q, 1Q. Maybe you don't want to take that plane from the desert. Maybe you want to leave it there and maintain it next year in hope of a better bounce and a more sustained drive.
We got to do this more often. George Ferguson, we've got to run because of markets and President Biden, but thank you so much. Something that all of our audiences really care about. Romaine, it's just, it's never boring. Not that I thought it'd be a snooze fest, but I thought it'd be predictable. And a 148.57 is just stunning on 10-year. Ira Jersey, who we had on moments ago, publishes for Bloomberg Intelligence, and Romaine, he's focused on 1.47. Yeah. And then after that, 1.38%.
And I think you are going to see a little bit more movement once we get past tomorrow, Tom. There are a lot of people that still want to get a peek at those CPI numbers in the equity market I'm referring to here before we start to see any significant move in either direction here. But you can see sort of the coil, the spring sort of being coiled here, and the potential now with yields dropping. And if you get economic data that seems to fold into the idea that the Fed will stay on the sidelines for longer, that could be the next catalyst here for the equity market.
But in the underlying thing I've heard in the last two days, even a week, has been beginning to look to next earnings season. No one's really considered, almost the machinery of what we do after J.P. Morgan announces, and we go through all those companies' view forward.
It'll be interesting because I think the next earnings season is going to be a little bit of a disappointment, particularly with some of the comparisons here. I think a lot of people are much more focused, Tom, on Fed policy, getting some clarity potentially out of that August Jackson Hole meeting, and maybe even potentially at the next Fed meeting if we start to get a little bit more guidance as to when, what that roadmap looks like for tapering and for normalization.
Our roadmap is to do a data check forward here on an eventful day on Wall Street, as Romaine mentions. The inflation story, will have a lot more color on that in the next 24 hours. Futures up 7, Dow futures up 4. SPX doing better than the Dow with a nice NASDAQ lift of 0.4%, 17.03 on the VIX. The president is on Air Force One. He will go to Cornwall, as will our Guy Johnson. Guy Johnson giving you important coverage from Cornwall and the G7 meetings tomorrow. That will be of great interest as well. We will advance the domestic dialogue, the senator from Pennsylvania with David Weston, in the 12 o'clock hour. Please stay with us on radio, on television this Wednesday. Good morning. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar. Minutes from the open, it's all about the yields. Yields lower, stocks poised to open higher, particularly big tech. From New York City for our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Ferro. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg The Open with Jonathan Ferro.
We begin with the big issue, investors gearing up for another big data point.
The US CPI print.
The real key data point.
Headline CPI.
I mean, the consensus is for a 0.4 pickup.
This might be a little uncomfortably high.
Any upside surprises there is going to dominate any of the other news.
What are the drivers? And does that start to dislodge things?
We don't see this necessarily as a destructive influence on the markets right now. The question now in the coming months is going to be how transitory that is.
It's the components of that print that look less transitory.
Look at, what's happening to average hourly earnings.
Wage inflation, like rents, like goods prices inflation, that might be a little more sustainable.
We're not going to learn an awful lot, unfortunately, in terms of that sustainability question.
Joining us now is the Bloomberg team, Michael McKee and Kaylee Lyons. Mike, let's start with you. We're looking for some key data points on inflation this week.
Yes, absolutely. We're going to get the CPI report tomorrow, and that's going to inform a lot of Wall Street's thinking about what the Fed might do going forward. If we get the numbers that they are expecting, 0.4 for CPI headline, 0.5 for core, the headline will be at 4.7%. That's the highest since 2008. The core would be at 3.5%, the highest since 1993. Now, there's two things you want to watch: housing prices and food prices. They make up together 38% of the CPI. And look at what the story with housing prices, the white line, is. They are not going up in the CPI, but everybody knows home prices have risen. So does that start to turn, and does that push housing up farther? We also have a question about base effects. That'll be in the numbers as well. But here's something interesting Bloomberg has done. This is the Fed 5-year outlook for inflation. It is much lower than what the market thinks. The Fed's 5-year forward in telling them they're not going to have a problem. So the markets are going to have a face-off with the Fed. Who's going to win? And finally, take a look at this number. Bloomberg Intelligence putting together a 2005 Ben Bernanke model that shows inflation is expected to rise to at least 4.3%, 4.8% next month, and then come down at the end of the summer. So this model suggests that it will be transitory. We'll see after the number tomorrow morning, 8:30 Wall Street time, Lisa, what the market thinks.
Mike, thank you so much. The market seems to be buying what the Fed is selling. Yields in the 10-year in the U.S. slipping to their lowest level today since early May. The stream of economic data that Mike was just talking about, not necessarily indicating to the markets anyway that the Fed is going to be shaken off course. Bloomberg's Kaylee Lyons has more. Kaylee.
Lisa, 1.48% on the 10-year yield. If we close at this level, that would be the
lowest close since early March. Really, the 10-year yield taking a round trip to not go much of anywhere over that time period in the last 3 months, down just 4 basis points. And it's really true in sovereign bonds across the world, looking at single-digit basis point moves in Germany, the UK, Japan for their respective 10-year maturities. And of course, for Treasuries specifically, we've been range-bound really since March, trading within the same 20 basis points or so, though moving more toward that lower end, where we've hit that 1.5% level a handful of times in the last several months. And of course, now we're breaking out at the bottom of the range. But our colleague Ira Jersey over at Bloomberg Intelligence says it's not 1.5% that matters, it's 1.47%, the intraday lows of March and May at a key support level. So that's really the question. Are yields going to keep moving lower or not? One potential catalyst, of course, could be tomorrow's CPI data, which Mike was just running us through, but the other potential catalyst could be on the supply side. We, of course, had that $58 billion 3-year auction yesterday, saw pretty solid investor demand, but we have $38 billion in 10-year notes coming online at 1 p.m. Eastern today, followed by $24 billion in 30-year bonds tomorrow. So we'll all be watching to see what the takedown is like, especially with the 10-year yields 20 basis points lower now than it was last time it was auctioned off, Lisa.
Kaylee, thank you so much. It seems like a strange situation when you have so much in terms of debt sales, you have higher inflation expectations, and you have bond yields under 1.5%. Joining us now, Morgan Stanley's Vishy Tirupattur and PGIM's Greg Peters. Vishy, let's start with you. Does this make sense to have a bond yield on the 10-year sub 1.5%?
I think the risk to the market is to lower yields than higher yields. And we think it's really a reflection that in the TIPS market, particularly in the near-term TIPS market and the CPI fixings market, the expectations in terms of near-term aggressive, much higher inflation had been rampant. And some of this is reflective of some of that positioning changing certainly in the last few days. So I think there is a degree of asymmetry here that is the market is not yet is prepped for lower prints in the inflation numbers coming tomorrow. Consensus, as you just discussed, is 0.44 for core CPI. But I think the key issue for us is expectations of much higher runaway inflation had been priced in, and some of those are beginning to be scaled back a bit.
Greg, your thoughts?
Yeah, just look at the sequencing, right? So it first started with the forward rates rolling over. They're down about anywhere from 20 to 30 basis points. Then you saw the break-evens roll over, and now you're seeing nominals roll over. So, to me, the market is appropriately pricing the decline, not only in growth, so we're at or past peak growth, but we're also at or past peak inflation. And so I think, this inflation narrative is completely overplayed. And if you actually decompose what's driving the inflation prints other than base effects, it's the sticky versus flexible. And the flexible items are the ones that have driven up near-term inflation. And so to me, that completely plays into this transitory story here.
So, Greg, why are there then stories? Why are there Fed officials, former Fed officials, coming out and saying that the Fed has it wrong at this time, that given the money printing that we've seen, given the fact that you do have this fiscal stimulus, given the fact that wages are starting to go up, this time is different, and this is something more than transitory. What's your biggest push against that?
I just really don't see it. I don't see how money supply necessarily turns into inflation. I think that is a playbook that goes back to the 1970s when other items were at play. So to me, I think it's an antiquated notion, and they're kind of stuck in the textbooks that they were reading back in the 70s. So to me, it just doesn't really kind of fit. So wage inflation isn't in and of itself a bad thing, of course, right? And there's very little evidence to suggest that actually leads to overall inflation moving higher. So to me, it's still very much of a false narrative. And I think the items that are currently plaguing the inflation market are items that are actually outside of the Fed control. So if the Fed raises rates, for example, right, does that change the chip shortage? Does that change the labor mismatch? No, it doesn't. So to me, I'm not really sure what's going on, and I don't quite understand why this narrative is being overplayed.
Vishy, do you agree that this is a false narrative, the idea of a more sustainable inflation?
I agree that there is a tremendous amount of hype about inflation. Inflation, we think will gradually be somewhat higher than what we experienced. But I totally agree with my former boss, Greg Peters, that there's too much of hype built into it. I want to highlight three things there. If you look at the last inflation print, last CPI print, there was the much higher number was driven by outliers. It was not like a broad-based thing. Number two is that the winners that they were clearly the lockdown and of all of last year created both winners and losers on the inflation front. So the pandemic losers that underperformed in 2020 have clearly picked up. That reversal has happened. But pandemic winners, take for example used car prices, have not reversed yet. So when that shift is still the lockdown, what we would call the lockdown winners have not yet faded. And we should not forget of the basic demand supply, the basic economic theory. Demand is sensitive to price increases.
Yeah. Well, this is a debate, I'm sure, that will continue, and it's continuing on both sides of the river. I don't know how much it's continuing between you two since you had a boss relationship going back. We'll get into that later. Former ECB President Jean-Claude Trichet, meanwhile, weighing in on the scene in Europe, saying there's a big distinction there in pricing pressures than in the U.S. Here's what he had to say in an exclusive interview with Bloomberg.
In terms of anchoring solidly medium and long-term inflation expectations around 2%, and we will see exactly what will be the conclusion of the policy review that is ongoing. But it seems to me that we are certainly not at a level where inflation would be a danger in Europe. In the US, it's different.
This coming ahead of an ECB rate decision tomorrow, Thursday. It's expected to be much of a non-decision, but there are some details that many are watching, including Bloomberg's Maria Tadeo, who joins us now. Maria.
Yes, Lisa, in that clip that you played, it really captures what the mentality is in Europe. I hear many times from many officials who say it is wrong to look at inflation dynamics in the US. It is wrong to compare what is happening there and translate it into the European scenario because the nature of the recovery is going to be very different in Europe. The stimulus is also going to be a medium-term boost. It's not the kind of stimulus that you get in the US. So therefore, the natures and the dynamics around inflation are different here. Having said that, tomorrow, Lisa, there's already consensus that we're probably going to get an upgrade on the inflation figures. We're also going to get an upgrade on the macro picture, the GDP, the growth. If you look at Europe at the start of the year and now, it's a very different story. The vaccination is now going quickly and it's reopening. And then, of course, the focus will be on that one line around the PEP program, whether or not the ECB decides to keep it significantly higher. There'll be a lot of attention on whether significantly stays in that statement.
Maria Tadeo, thank you so much. Vishy Tirapatur and Greg Peters still with us. Greg, I'm curious your view, given the ECB's likelihood of staying where it put, even as they potentially update their inflation expectations. Do you see opportunity in Europe, or do you see potential risk as people move toward a more optimistic view of the region?
Also, I think it's still important to note that they're below their target still, right? So the ECB is still below the 2% target. So I think what we're looking for is not so much this meeting, but kind of the in-person meeting that's happening in a week or so that outlines a broader framework. And so I think what the markets really need around Europe is a broader framework. But you're looking at an economic rebound. It was slow to develop due to the vaccine rollout being much more dampened and slow. You're still seeing inflation below target. So the ECB still has a lot of wood to chop, so to speak. And I think the narrative around Europe is going to be the opposite of what we've seen over the past 7 years or so. And that is actually fiscal stimulus, fiscal uplift. And so that's a really important narrative to watch out for. But I think, Europe has been outperforming from a risk asset standpoint here over the near term. And I think there's a potential, given kind of the ECB uplift, that'll continue.
Vishy, do you agree?
I agree, but I take a somewhat of a different tack here. One where I would see this playing out is actually through the through the lens of the real yields in the U.S., making the interesting take to me is being long dollar versus euro as a reflection of a number of things, including some of the things that Greg just said. I think the key driver in my mind is higher real yields, regardless of the tomorrow CPI print. Higher real yields that will actually make the dollar a bit stronger, and we would play that versus euro, meaning long dollar versus euro.
Vijay, Greg, you'll both be sticking with us. Bloomberg's Abigail Doolittle joining us now with a look at the stocks moving ahead of the opening bell. They're feeling a little memey.
They are indeed feeling a little bit memey. In fact, let's take a look at one of the original meme stocks, AMC. It is having a rare down day. Shares are down about 5% at this point. Who knows why? There's not a lot of rhyme or reason for these movements, but it appears that these shares are certainly cooling off, similar to what happened last week after they did announce that greater than 11 million share offering or distribution. As for the movable feast of meme names, let's take a look at some of the new ones. You have Clover Health Investments up a second day, up 21%. Context Logic, a new one, an e-commerce services company, another company that's not profitable. Nonetheless, it's up 27%. A lot of these stocks at this point, Lisa, the short interests aren't all that high, but for Root, which is a tech company in the insurance industry, it has a decent short interest, 23%. So there's a bit of a short squeeze there, up 14%. However, the big macro story that you have been talking about all morning, the 10-year yield below 150, rates coming in, that is naturally weighing on the big banks, Lisa.
Yeah, this has been something that we've seen, especially with the yield curve flattening recently. Abigail, thank you so much. Coming up, staying in Europe and the U.S., shedding tariffs, the U.S. and Europe preparing to end their outstanding trade disputes next week in Brussels. That conversation coming up next. We do see a lift, particularly to NASDAQ, and perhaps stemming from the decline in 10-year yields, now 1.48%. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Strengthening the alliance, make it clear to Putin and to China that Europe and the United States are tight, and the G7 is going to move. Thank you.
Mr. President, do you expect to come out with a vaccine strategy for the world?
I have one, and I'll be announcing it.
President Biden earlier this morning departing for the G7 summit in UK. His first stop before heading to Brussels next week. EU leaders and the U.S. signaling plans to end outstanding trade battles, according to a draft of the conclusions seen by Bloomberg News. Germany's foreign minister encouraging efforts to end the $18 billion tariff fight, saying, quote, "We should finally put ongoing disputes, of which unfortunately there are some, behind us. We are now making progress in some areas." For more, let's get back on Michael McKee of Bloomberg. Mike, what's the importance of this?
Well, the first part of the agreement is largely symbolic, but it is important. It's been going on for years, the fight between Boeing and Airbus over whose government subsidized whom. At the WTO in 2019, the World Trade Organization authorized the U.S. to put tariffs on $7.5 billion worth of EU exports, while the EU won permission to hit back with levies of $4 billion on U.S. goods. And now it looks like both sides have agreed neither one benefits, and they'll just resolve it without any kind of tariffs, which would be good news for both of those companies, and their shares are up. The other issue is the steel tariffs that President Trump put on, and those are going to be tougher for Joe Biden to deal with. He and the Europeans, according to this agreement that Bloomberg News has seen, are going to try to phase out those steel tariffs by the end of the year. But if you take a look at the stock prices of the steel companies in the U.S., they're soaring because the price of steel has been soaring. And they've written a letter to the president saying, do not take off the tariffs. The users of steel, like the automakers, have written their own letters saying, please do. It costs us too much money. Puts Biden in a bind. The states are politically important where steel is made, but it does hurt the U.S. economy. So what does he do? Looks like he's betting having an alliance with Europe is better than, at this point, a political stop to the Midwest.
Michael McKee, thank you so much. The U.S. and the European Union also expected to announce a partnership to address the semiconductor shortage in both regions, with a draft of conclusions reading, quote, "We commit to building an EU-U.S. partnership on the rebalancing of global supply chains in semiconductors with a view to enhancing EU and U.S. respective security of supply." Back with us, PGIM's Greg Pitters and Vishy Terpatur of Morgan Stanley. Greg, this has been an ongoing issue, the supply chain disruptions that have actually fed into some of the inflation calls that we've seen in an ongoing basis. What have the market consequences, in your view, been from some of these supply chain disruptions that have been pervasive and really caused some problems for factories and for suppliers?
Yeah, so I think that has been a big driver in the recent inflation move. So the fact that you're seeing a stronger alliance across U.S. and Europe, all else equal, is quite positive and disinflationary. So this is yet another example that I think, you're seeing, working across the pond that will lead to, less price pressures and less dislocation. So, I don't think anyone ever thought that tariffs were inherently a good idea. And the fact that they're getting rolled back and the fact that you're seeing greater...
Okay, traders, are you ready to play stop and profit for Japanese yen? I'm going to play stop and profit at 109.389. Okay? Stop and profit play. So if you sold short a couple of days ago, if you follow trade and decided to trade Japanese yen, please place stop on profit at this price. Okay? Whatever happens, you will close this trade in profit. I'll speak to you later.
Certainly not inflationary, so somewhere in between there. I agree with one point that Greg made, that they're actually talking, and the talks are progressing well is a good sign. Adding just the tariff war would benefit no one. And this is exactly the opposite of that. That is something to be positive, constructive about.
Vishy, when you worked together, did you guys disagree all the time?
We'll let Greg answer that one.
Greg?
No, I know. We're actually pretty well aligned. So it's good to be back with Vishy. So I think we work really quite well together. At least that was my perspective, Lisa. So, Vishy might have a different view, of course.
Greg, just real quick here. I'm curious where you think the 10-year yield will end the year, given the sort of rejiggering and inflation expectations.
Yeah, so it's tough to say over the near term. I mean, we kind of made a bold call.
Let's move further. Our stop and profit for Japanese yen, and I'm going to place stop and profit at 109.5.
But I think our year-end call is for 120.
109, sorry, 359.
You know, we still think the buy
just right here
for lower yields, not higher.
Okay, please move your stop and profit at 109.359.
Into
stay safe
and the years to come as well.
Vishy, just real quick, what's your year-end forecast?
Slightly higher than where we are now, but I think I do see the point that Greg is making. We certainly thought it would be marginally higher than here, but not dramatically higher than here.
Greg Peters, Vishy Tirupatur, thank you both so much for coming on. Coming up, the morning calls and later the calls to buy Europe growing on Wall Street. That conversation still ahead with BTIG's Julian Emmanuel and Esti Dweck of Natixis. This is the countdown to the open. I'm Lisa Abramowitz in for Jonathan Farrow.
World leaders meet. On the agenda, global tax, security, climate change. Tune in for extensive coverage from the G7 summit in Cornwall, England, and the NATO summit in Brussels. Live on Bloomberg Television and Radio.
Inside of 5 minutes left until the open, we could see stocks getting a lift today from the lower bond yields, particularly NASDAQ up 0.4%, S&P up 0.2%. Those treasury yields continuing to decline. Time now for our morning calls. We'll look at some of the analyst recommendations on Wall Street this morning. First up, JP Morgan downgrading Dish Networks to underweight with a $45 price target. The analyst citing heavy competition and wireless execution concerns. Next up, Credit Suisse upgrading Colgate-Palmolive to outperform with a $95 price target. The analyst pointing to impressive growth trends and market share gains across key categories. And finally, Wells Fargo upgrading Fox to overweight with a $47 price target. The analyst expecting a big push into the sports betting industry following the company's recent investments. Coming up, investors looking abroad for fresh gains. This is Bloomberg.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacwan. We'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Ferro. Just moments away from the opening bell, we can see that as time goes on, futures get even more of a lift at near session highs. NASDAQ futures up more than 0.4%, leading the way on the heels of those lower Treasury yields. You can see S&P up 0.2%, Russell up 0.3%. If you flip up the boards, though, really where the action is in the yield space. You can see 10-year Treasury yields falling as low as 1.48%. They are staying there as people continue to bid into them. Crude at the highest levels since 2018, and the dollar with a slight bit of weakness versus the euro. Let's head over to the markets desk. Bloomberg's Abigail Doolittle joining us with the stocks moving at the opening bell. Abigail.
Lisa, tying in that macro theme of yields coming in once again, as you were just mentioning, that 10-year yield below 150. It is helping out, not surprisingly, big tech. But we're not looking at huge gains here. We're looking at modest gains for the likes of Apple, Microsoft, Amazon, and Alphabet. Nonetheless, that is $6 trillion worth of market cap there. So not surprisingly, we do have stocks higher in the S&P 500, I believe close or at a record high. As for the banks, though, not so much. As you were mentioning, the yield curve coming in, yields in, not helping the possibility of these banks in terms of lending. At least that's the thinking. So you have the big banks lower. And then finally, rounding it out, how could we not talk about the meme mania? A bit of a split here, though, because AMC is lower. Costcorp, one of the other original meme stocks, that headphones company, they had been lower, now higher. Two of the new ones, Lisa, Context Logic soaring up 16%. And then take a look at Clean Energy. That is the new kid on the block, up 43%.
Yeah, Tom Keane's been asking, what makes a meme stock? And we answer, we have no idea. Abigail, thank you so much. Double Line's Jeffrey Gundlach weighing in on the meme stock resurgence, telling investors last night, quote, I don't want to be involved in any of these stocks. You're just playing with fire with that type of stuff. Gundlach also turning positive on European equities, saying U.S. outperformance is coming to an end. For more, let's get to Bloomberg's Kaylee Lyons. Kaylee.
Well, Lisa, Gundlach said this felt, quote, really weird because he's been negative on Europe since Double Line began about 12 years ago. But he says when you look at Europe relative to the S&P 500, it's starting to trend in Europe's favor. And certainly European equities are performing well. The Stoxx 600 could notch a fourth consecutive record high today. And it's outperforming both the U.S. and global equities on a year-to-date basis, with the iShares Europe ETF up about 16% over the course of 2021 thus far. And we're seeing this bid into Europe show up in fund flows as well, not just performance. The iShares MSCI Eurozone ETF seeing dramatic inflows recently, luring about $1.1 billion in new money on Monday alone. That, of course, was a record. We saw cash going in yesterday as well. And this really follows the month of May in which...
Okay, guys, let's move further our stop and profit for Japanese yen. And I'm going to move to 109.319. Okay, stop and profit moved even further. So please, if you hold this position, please move your profit even to better position. Okay? Okay, I'll speak to you later, guys.
On that 10-year yield continues to go lower. I just want to point out it's crossed the 1.47 handle now and continues to go toward that threshold that Ira Jersey of Bloomberg Intelligence says is key from a technical perspective. Joining me now is Esti Dweck of Natixis and BTIG's Julian Emanuel. Esti, can you give me a sense, make sense of this yield, this move lower in 10-year yields at a time when we're getting inflation reads that are above expectations?
Absolutely. Good morning. I really think at this point it's a question of not being surprised even if the inflation print is high. We know inflation is going to be higher in the second quarter. We don't know, or we won't know, if the Fed is correct that inflation will be transitory until much later in the year. And for now, even if inflation comes out a little higher than street expectations tomorrow, the Fed isn't going to change its path. It's going to stick with this view that it's transitory. And the Treasury market is kind of preparing for that, just saying, well, we probably can't be surprised on the upside because despite the higher prints, Treasury yields move lower. And maybe we get a surprise on the low side. So I'm not saying that's where the print will come, but that maybe is what would surprise the market. So there's a lot of wait and see going on, and really just thinking it would take a lot to really surprise markets with the inflation print tomorrow.
Julian, what's your view here? Does it make sense?
It does. The psychology is quite tenuous. So if you look at it, there's this element of fear of peak growth. Okay, we're going to grow at 6, 7, 8% this year, and then next year is maybe only, and I say only with emphasis, 4% or thereabouts. The thing that's misguided there is if you look at the course of the virus in particular, is the rest of the world is behind the U.S. in terms of its growth trajectory, and it is going to catch up either late this year or next, which is going to be supportive. I'd say the other two things that explain the yields coming down, again, this whole idea that the virus has a different trajectory in the rest of the world, which is bringing international investors to look at U.S. yields once again. But also, as we've discovered over the last 48 hours or so, it may be more difficult for the Biden administration to launch those grand spending plans that have been on the docket.
Julian, how much do you attribute the meme stock mania or the resurgence in interest in meme stocks to this idea that rates are going to remain low for a prolonged period of time amid a sanguine economic backdrop?
Well, it's sort of the other way around in terms of causation, in our view, Lisa, is that basically the bond market stalled out a couple months ago, and then call it several weeks ago, you started getting this interest in the meme stocks again, because at the margin, a leveraged account realizes that they're not going to have to pay any more for leverage in the near to medium term. And frankly, the message has been consistently over the last year is that as long as, even if yields are rising, as long as it's happening at a gentle pace, that's a green light for risk. And clearly, this has become ground zero for risk in a market that ostensibly away from meme stocks isn't moving that much.
SD, is that how you understand it as well, the meme stock situation? And are you playing it all in it, or are you just staying away like Jeff Gundlach?
No, definitely staying away from that. I think there are a lot of different factors at play. It could also be that other headlines grabbed our attention for a little while, and we're coming back to that with what happened in the last few weeks. We also know that a lot of the stimulus checks haven't been spent on quite yet, so there could be a little bit of, we know some people made money on this, why not have a look? Really, I think, as you were saying, the broader market hasn't moved so much, but that's mostly about technology. When you look at the S&P 500 equal weighted, you've continued to see improvement, you've continued to see advances, and we think those cyclical sectors are going to continue to do well, regardless of what happens with some of the meme stocks.
All right, we're about 7 minutes into the trading day. Let's head back to the markets desk. Abigail Doolittle has an update for us. Abigail.
Indeed, Lisa, and it's pretty interesting because the S&P 500 has been stalled in this sideways trend, but right now heading perhaps to a closing high. 4 o'clock is far away and just points away from an all-time high. On the other hand, the banks are breaking down out of that sideways stall. The KBW Bank Index over the last 5 days down 1.8%. You can see the S&P 500 up 0.6%. Not a huge divergence, but you want to watch when you have these splits. And of course, it has everything to do with rates, making it even more interesting. On the year, not surprisingly, banks, one of the best sectors, the second best sector. Energy takes the cake, up 46%. 1%, headed to its best year ever if these sorts of gains hold on oil climbing. And then, because on the year, yields have backed up so much, that has helped the financials up 29%. Not surprisingly, utilities and staples, the dividend-rich sectors on bottom. Even more interesting, Lisa, though, even as we have rates come back in, the 10-year yield, as you know, giving up basically 30 basis points, banks have come in a little bit, but a minor stall. But again, something to keep an eye on. Sometimes these divergences, these moves start off in small ways, and it does appear that banks in a little bit, not huge, at least right now, Lisa.
Abigail, thank you so much. And Steve Sosnick of Interactive Brokers correcting me and saying there is a definition of a meme stock, and he had a great definition. It is a combination of millennial nostalgia and angst, to be discussed, I'm sure, further at another time. Esty Dweck and Julian Emanuel still with us. I'm not going to get up into millennial angst right this moment. I do want to, however, pick up on the financials. And Julian, I'm wondering whether you are sort of souring on the financials as the yield curve contracts. We're seeing it today, the 210s gap contract to the lowest since March. Has there been too much optimism baked into these shares?
Well, I think you have to think about it from a longer-term perspective. You know, from our point of view, at the end of last year, that was a very significant turn in the relationship between growth and value. You've only seen turns like that near the time of the financial crisis, and then back at the top in 2000 when value took over from growth. So to us, this is a trend of outperformance in value generally that's going to be measured in years as opposed to months or weeks. Now, clearly with the yield curve flattening a bit here, the correlation to financials is obvious. Where we would look and where we think is very interesting is in sort of a cousin of financials, and that's REITs. The phone has been ringing off the hook there. It's an interesting inflation hedge. There is this correlation to financials and value, and we think that's a place that's got a lot of room to run.
Esty, what's your view on financials?
So we've looked more at European financials than U.S. financials, and you've really seen a very strong rebound there. You have a ton of support from the European Central Bank, and that is set to continue, really trying to protect the banks throughout a lot of their policies. In the U.S., I think I would tie it in, to the value play. And again, on a multi-year outlook, they're still very much under-owned and undervalued. So they've had a nice run, but there should be more potential. Although I would agree that REITs is an interesting place to look at the moment, as is energy, that I think continues to have a lot further upside.
And I'm wondering, though, about the real estate investment trust picture, especially given some of the changes in office space and in other types of commercial property. I'm wondering, Esty, is there any type of REIT that you're staying away from or favoring, among others?
So I think the view that commercial real estate was going to be one of the big losers from the pandemic, I think we've moved on from that a little bit. At the beginning of working from home last year, it went better than expected, and people thought, you know, this is going to be okay. Maybe we won't go back to the office. And yes, we're talking about a lot of hybrid models going forward, but there is still a desire to move back into the office. A lot of businesses do want people to come in, so it might not be as full as before, but I think it would be a little overly reductive to just assume that commercial real estate isn't going to continue to do well, or there isn't going to be demand for that. So at the moment, I'd say relatively broadly speaking, there's room for upside for the REITs market.
Certainly in Midtown Manhattan, you're starting to see people come back to the office. Esty Dweck, Julian Emanuel, you're both sticking with us. Coming up, infrastructure negotiations breaking down in Washington. President Biden ending talks with Republican Senator Shelley Moore Capito. More still on that story ahead. And meanwhile, you're seeing equities go higher, drift higher, although off earlier highs. The S&P up now just less than 0.1% as Treasury yields go lower. This is Bloomberg.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley. It's a management shake-up, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are pursuing the pursuit of reconciliation. And that is going on at the same time. And it may well be that part of the bill that'll pass will be bipartisan, and part of it will be through reconciliation. But we're not going to sacrifice the bigness and boldness in this bill. We will just pursue two paths, and at some point they will join.
Democrats showing a willingness to go it alone. Senate Majority Leader Chuck Schumer signaling that Democrats will continue to pursue a bill regardless of bipartisan support. President Biden pulling the plug on infrastructure talks with Republicans shortly after, following weeks of failed efforts to bridge divides, turning to a bipartisan group for a potential deal. GOP Senator John Barrasso placing the blame squarely on the Democrats.
The negotiations ongoing with the White House on infrastructure have hit a significant roadblock. Republicans are committed to working on infrastructure the way that most Americans think of infrastructure: roads and bridges, and waterways, ports, airports, and broadband. The administration doesn't seem to want to go that way. They're ordering and including lots of things that are not what the traditional infrastructure ideas would include.
For more on the road ahead, Bloomberg's Eric Wasson joining us now from Washington. Eric, are they actually still negotiating? Is there a new bipartisan group in further negotiations?
Yeah, there are a couple of green shoots here overnight. We were down in the Capitol basement last night as a group of 10 senators, 5 Republicans and 5 Democrats, including, crucially, Joe Manchin of West Virginia and Kyrsten Sinema of Arizona, were meeting behind closed doors, trying to come up with another bipartisan proposal they could take to the Biden administration, possibly to a larger group of which they're a part of 20. That number is really crucial because it would include 10 Republicans, which is the magic number you need to get 60 votes to clear things in the Senate. They emerged from that meeting saying they're going to continue talking. Again, we sense the real problem is how to pay for it. You know, Republicans are saying you've got to claw back some of that unspent stimulus money, COVID relief money. For example, the states are not paying all those expanded unemployment benefits, as we saw high jobless numbers. Can we use some of that money? Democrats are continuing to say, let's roll back some of the Trump tax cuts, even if it's not the corporate rate, perhaps establishing a 15% book tax on corporations to make sure people don't completely avoid taxes. So that continues to be a sort of a hang-up. Also overnight, a bipartisan group in the House came out with not with pay-for-it, but at least a $1.2 trillion wish list that they could support. So that's closer to Biden's number. It does include some already pre-planned maintenance spending. So there's some green shoots here. But as you mentioned in the top, Schumer is preparing this budget reconciliation process. This would be a Democrat alone process to ram things through. But that would require Manchin and Sinema to get on board, and they want to see all bipartisan options exhausted before they're willing to put their political careers at risk by ramming something through.
Eric Wasson, thank you so much for taking the time. There is a question of what the market does with this and the will it or won't it pass kind of negotiation that's been going on with infrastructure for a very long time. Esty Dweck of Natixis and BTIG's Julian Emanuel still with us. Esty, what's your view in terms of how much is priced into the market with respect to infrastructure spending in the United States?
At this point, probably not that much. The negotiations are clearly not moving along as quickly as some hoped. I do think they will pass something, whether they manage partly bipartisan and a second partisan bill or just one big partisan bill. They will get something done. So some of it is priced in. I think there are a couple of things to keep in mind. The first is, even though the numbers are quite large, whatever Biden manages to get is still over 10 years. So on a 2022, 2023 basis, we're talking maybe 1% of GDP. This isn't at all on the scale of what we've seen, obviously, with the COVID relief packages. So some of the growth picture is priced in, but this isn't going to materially change the outlook for 2022. This is going to be a lot more about a self-sustaining recovery and the labor market continuing to improve. What is maybe not so priced in is the risk of tax hikes. Biden is very set on increases some of these taxes. The market doesn't think he's going to manage so much, so we could get a little bit of a negative surprise if he does get that, especially if we do have a partisan bill that comes through later in the year.
Julian, do you agree?
Very much so. I would say if you go back 4 or 5 weeks, before the bond market started slipping lower in yields within this range, there was a lot more priced in than there currently is now, appropriately now, given the direction of talks. But to that last point on taxes, we would absolutely agree that the market is being very, very sanguine about not seeing material tax hikes, because all the work that we've ever done essentially says that it's very conclusive. Stocks don't like higher taxes. They get somewhat uncomfortable in the year that the legislation is passed, and they get materially uncomfortable in the year where the bill actually comes due.
This is actually something similar as Mike Wilson of Morgan Stanley and Jared Woodard of Bank of America were saying yesterday on the show. Thank you both so much, Esty Dweck and Julian Emanuel. We really appreciate you being here. For some of the sector price action this morning, let's get to Bloomberg's Dave Wilson. Dave, what you got?
Well, what we've got really are healthcare stocks at the forefront among the 11 main industry groups in the S&P 500. Merck leading the way after getting a $1.2 billion contract from the U.S. government for a COVID-19 treatment. Beyond that, I mean, big tech moving higher, and some of the more economically sensitive areas of the market trailing as they have for much of this week. Financial stocks, industrial stocks, and commodity producers, whether you're talking raw materials or energy. Now, looking at consumer staples, I mean, they're moving up, but one area that isn't is packaged foods. And this is tied into Campbell's Soup as much as anything. They are now expecting their earnings for the fiscal year ending in July to be down rather than rising as they had previously forecast. It's really a sign that all that stay-at-home buying of stuff for the pantries is just starting to fade here, and Campbell is feeling the effects.
Yeah, people are a little sick of canned soup, evidently. Who knows? Dave, thank you so much. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. In the markets, a little bit of a fade to the rally that we saw earlier in the day, off session highs, with the Nasdaq up less than 0.3%. The S&P almost flat on the day. Yields still lower, though, and this is really the big move of the morning. In addition to commodities, the idea here that the 10-year yield is below 1.48%. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
Is busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Welcome back to the Open. Here we are almost a half an hour into the session. You can see a really interesting development. Basically, fade to the rally. S&P up basically almost flat on the day. The Russell actually lower, and the Nasdaq still eking out gains. And this really all comes on those lower yields with 1.47% Treasury yields, really raising questions about the prospects of growth, which is perhaps what you're seeing reflected in the Russell 2000. Time now for the trading diary. You need to be watching this week. U.S. wholesale inventory is coming at the top of the hour. At 1 p.m. Eastern, the Treasury auctioning $38 billion in 10-year notes. We get an ECB rate decision, plus that big U.S. CPI inflation print coming on Thursday. And the G7 Leaders Summit rounding out the week on Friday. Really, I want to point out something in markets. Basically, this is a growth fear, perhaps that we have priced in too much inflation in the markets. And this is a capitulation on those hopes earlier in the year. And you can see it most in the 2-10s curve. The idea here, the gap between 10-year and 2-year Treasury yields narrowing the least since March, still above where it was in the depths of the pandemic, but still a sort of fade to this hope of faster growth. This was Countdown to the Open. Crude is at the highest levels since 2018. Commodities continuing on their tear. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
Okay, traders, position closed on Japanese yen. Well done. We hold it for a couple of days. This position, we closed, we sold short at 109.409. We closed position at 109.319. In our case, we received 900 pounds in profit. In your case, it's all about how much you decided to trade Japanese yen. Okay, stay safe. I'll speak to you later. Let's look for another good trading opportunity to make profit. Okay, I'll speak to you later, guys.
So ¿dónde vive acá? En la parte de...
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug. Yeah.